Okay, so welcome. We have basically this is the legend. If you ever type in legend in the chat, you should find this, and it basically gives us an idea of what the lines mean. And okay, we'll start out with the blue ones. They're the abstract lines. Basically, they can work like barriers. And when I make them blue and white like that, it's just to emphasize that that's like literally the one that I'm focused on the most because it stands out the most. When I make something striped in general, I uh, I want it to stand out more. Um, but blue lines basically they're levels that could be used as barriers. They're not the same as your ordinary trend. They could be used as obstructions, and basically, like we see here, we run into it. We can test it from both sides. That's something that's pretty normal. So I would not be surprised to see it test that from above. Again, there's no stops that are safe above it. Um, it may be so inclined to make that test. Now, of course, we've got the yellow lines. They're typical trend breaks, trend lines that basically break in the opposite direction with impact. A typical trend change. Unlike the blue line, they're not just like obstructions, but when we get closer to it, the risk becomes higher that the trend does change. Now, of course, the trend can break in a sideways manner. Sometimes it chooses to do that, and there's nothing about the yellow line itself that will tell us that it will do that. Now, of course, we can see on the short-term move, we came back down to test the blue and white line. If anybody traded that, you want to make sure it's safe and there's no way that it can become a loss ever again. Dragging your stop into a profit, like let's say, for instance, if, not to say that I said to trade there, but if you did, um, let's say you made a trade and you originally had a stop there. It comes down to hit the target. You take some off at the target, drag your stop down. Don't let it become a loss again. Something like that. You don't have to drag it too low, but basically having it safe means that you can hold knowing that you've been paid, you've taken some off, you've locked in some profit, and you've dragged your stop down to a point where there's no way that the stock can, or the market or whatever you're trading can come back up to hit the order and your account be affected negatively. So it's either some profit or more profit, and that's a deal I'll sign up for any day. But anyways, we have the red yellow lines. They're like yellow lines, except very much more. They're more important. They're inclined to be something that I really can't have anybody missing. Something that I can't have anybody uh, neglecting. I guess you could say they're ones that I'm really interested in because they will have a high impact when broken. Um, it basically it means like when the red yellow line breaks, it could be the final trend break required to change the trend. Like let's say for instance, you've got a long-term trend like this and it's moving like that and it's fine, but then it starts moving like this and you've got another trend here and debatably another trend here. If it breaks this trend, is it still in an uptrend? Well, yeah, it's in this trend. I can't take that from it until that trend breaks. So that's the uptrend. So I could make that one red yellow. But of course all the other ones would have to break before that final one. But that final one, you couldn't say that it was in an uptrend anymore if we broke that line. Under no circumstances. So that's how I would make that one. Now, of course, we can see that we've platformed off of the green zone and we're using the red zone. And of course, this is very similar to how we did it in the morning yesterday. We're in the same range. Now, obviously, don't be surprised if it uses the green zone and red zone. If it decides that this range is as good as it was yesterday, could we make even the same triangle in here? Of course we could. It must be allowed. Like, that's the idea. So in the event that anybody drags their stop within the range here, I mean, if it is to be used either way, no matter if you're long or you're short, there's really no safe place for your stop. I mean, if you're in from any point below, you really don't want to be dragging your stop in here just because if it is used, I mean, it can cost you your position. Where are you going to get back in? Somewhere in the range? Well, it's a lot harder to do that because when you get into a range and it continuously is used, I mean, it can overlap your position many times. So it's far easier to be in from outside of the range and endure patience as it traverses this range. Now, of course, there's three different ways you can protect your trade in this environment. You can decide to hedge it. Like if you're in an NQ, you know, like I say, MNQ can be used, but five or less. Because if you use 5 or less when you have one NQ, so if you're holding one NQ for long-term gains, profits, in the long term, if you trade with 5 MNQ against it, it means that you don't have to sell your long-term exposure. You can take small, short-term trades like ones back to this blue line using MNQ. And as you're waiting for the long-term trade to develop, you can make small, short-term, lower risk trades with smaller amounts of capital as you're waiting to get to your target. Now, of course, the green lines, the green dash lines, they're often targets for the break of red-yellow lines. They're also targets for Fibonacci um, tools. So there are levels that I want to hit in the future that haven't been hit before, or that can be hit, basically that I'm interested in. There could be multiple green dash lines throughout the chart. Not all of them will we be interested in getting to immediately. Like for instance, when we passed these lines earlier, and I was like, oh, there's some small green dash lines there. This is now a green dash line. So it means that any stops that are dragged above its path of hitting can be wiped out. Now, of course, we can apply levels to that level, and obviously the 188-200 is one of the major levels that we've been seeing um, bring us to that. Second to that is the 261, which is up here. Yesterday, these levels had a little bit of a hiccup and didn't work at all. Will they work today? I mean, you don't have to bet on anything if you're not certain. It's not a gamble. So you want to make sure that you're absolutely certain when you're going to make a trade. And having something fail multiple times can kind of throw a wrench in it. So you're going to use full size. Do you think it deserves full size? No, it doesn't. If you're going to do it, it deserves less. It deserves skepticism. And it deserves quick profit taking as well. So, like for instance, if you take multiple contracts, trimming some of them off immediately could pay for the any kind of difficulty that it presents. Like for instance, dumping off this much and coming back to the 188-200 could have adverse effects. So, making sure that you have some profit off before is nice. I like to take some off anyways when it pretty much lunges in the direction that I expect it to, and when it freezes like that, I'm deterred by it. It makes me think there's a trap. Anyways, the previously hit targets that are still of interest, kind of like green dash lines, except they've already been hit, and I'm interested in hitting them again. I'll make them blue because they're not like fresh, right? And then if I make a gold one, those are just really high important levels. Like 61s are gold. I make just levels that I really want people to understand are high impact levels. They don't necessarily have to be reversal levels. They don't have to be targets, but just important levels for whatever reason of that day. There could be something to consider at that level, and it's meant to raise questions. It's like, oh, why is there this colored level here? Because if you don't know, we need to understand before we take action. So, and obviously the green dash lines are the same going horizontally as they would be diagonally. Price targets
20
off.
seconds, right?
Yep, 20 seconds to report. Right on. Any hedges or shorts that have been taken must be protected with a stop. Yeah, every single trade from now on out is obviously directly exposed to the report. which I honestly think is going to be very anticlimactic. But we shall see. So we can see that anybody that touched the 188-200 is now stopped out of their position. The only way to protect it was to drag the stop down and take value in this small move that was there, because there was danger. And that's what I'm talking about. And even without knowing that there was a report, I could just smell the danger from a mile away. I was like, yeah, I do not feel comfortable with this, and you want to make sure that it's normal. So you want to make sure that it's safe. Continue holding. Now, of course, this is the 261. Remember, out of the two levels, we look at the 200 and then the 261. The 261 is notorious for leading back to these levels, because it's kind of like, oh yeah, all the people that shorted at this level, they got screwed. We can come back and give them their position back sometimes. Not something that I think is a very high probability trade yet again, but something that I would dare to obstruct. And I'm like, well, the most common movement,
40-point move. That was decent. You know,
I suppose.
I mean, it was no 100-point move, but
I mean, the fact that it was over in 1 minute, uh, and it moved against the technical pattern, I'm like, that's done worse for more people than it's done good for.
Yeah, I took a new fib set out on like a 30-minute or a 15. Even a little further out, yeah.
Hmm. Yeah, that insinuates that we could be going all the way up here.
Yeah, the 188 lines up roughly with the POC up there.
Mm-hmm. Funny enough, that 188 is suggestive of grinding at it. Like, we could get stuck on it. I don't think it comes down off of it at all. Yeah, I think the goal is to go up so that we can stay up.
I mean, I'm at a trend line, but it's pretty close to your red yellow too.
Yeah, that's a long-term red yellow. It struggled to break many times. Basically, this is how it initially broke, because you could see the first response that we had to that level was a pretty major response, and you can see that same kind of, attitude that it had towards, oh, this is the area that was the best place to trade. Anybody that caught that exciting big move out of it just was swatted right back down, because the market did not respect where they traded. It was like, oh, you didn't find value in the choppy area at the very bottom when nobody had any sign of reversal. And instead, everybody bought late. And the market's like, just, oh my goodness, terrible. Just wipe them all out. And essentially, I just, I can't be caught trading in those exciting blast areas. Like this entire blast right here, it is subject to being taken back, so no stops are safe within it. And I am incredibly adverse to thinking that it's going to be a fib that's going to reverse this day. I do not think it will be the case. Do you see how we ranged between the two levels all night last night, and how much it decided to use these? I mean, like, what is the actual indication for reversal and at the points that have been the best? And it hasn't been fibs. It's been a like maybe 20-30% of the time So they're gone, like out of my arsenal of things that I really care about right now. Like I really do not care about them. And this might be hard to hear, but it's true. I'm not
Yeah.
interested in fibs.
John, it basically just went, it's very close to the VWAP. And I put a VWAP in around 16:30 on Wednesday, the 15th of November. Just when it started consolidating there after I made the hook.
Mhm.
And it seems to be abiding by it here.
On the 16th, you
I mean,
say?
yeah, go back to well, in this particular case, it's the 15th of November at around 16:30, somewhere in there. 1600, 1500, somewhere in there. Yeah, 15th November.
Uh, at the beginning of the consolidation.
Yeah, something like that, yeah. And it would be a little bit higher than where we're at right now. See?
Yeah, I see that.
And of course, I put that purple line in with it, right? And went past it, and then you're basically at the extreme on this in this particular VWAP area, and it's really abided by it.
Hmm. My bands on it are wide. I can see we just responded to the red yellow line with absolute precision. This is the new, and I'm gonna make this like a darker blue line that's been used up because this is the new blue and white line.
It makes sense if we just go sideways. I mean, we're still a ways away from that uptrend line.
Yeah. Well, they've made it really nice because, technically until this line at the very, very bottom breaks, we're in an uptrend. I mean, it's miles away. Of course, it has no urgence to breaking whatsoever, but it is a trend, and until it breaks, that is the trend.
Seems like when it's so far away from the trend line, it's just weak to actually go down and sort of, even if it's coming off a fib, since it's so far away from the trend line, it just doesn't have the incentive to go down hard and
Well,
break it.
and it's like, where have the institutions dealt with the people? All of the people are still going to be like excited and emotional. They're all going to be there. There's not been a chop that's like, cause like a lot of people like, I feel like the attention span of the average human being is decreasing drastically. And, you know, it's perfect for people like us where, you throw a consolidation at us. I mean, like how many consolidations have we been through in the past month? I mean, like what is it to go through another one? From 9:30 to 4, and it's like it can consolidate all day if it wanted to. It's not going to affect me because I'm going to have to be there no matter what, just like every institution, just like every professional in the industry. And there's not something that I can say because, of my integrity or the way that I hold myself accountable that I will get up and leave the computer because it's not good for me or because I'm not in a trade. It's like I come from, if I'm not playing hockey, I'm there watching my team. That's the way it goes. That's the way I was raised. So it's it's not like I don't like the idea of the culture of, oh, when I'm done work I try to get out of work early and all that stuff. It's like that's normal people. I'm here after hours, I'm here late, I'm here all day, and I'm here and I'm not gonna leave. So and I mean, what's a better way to do it? Find excuses to leave? I'm like, that's what everybody seems to be doing. Even on the trading floors, like when I worked professionally in the trading floor, there's people trying to find excuses all the time to leave, and I'm like, well, You know, if you know what you're doing at all given times, there's always something of interest to consider, something that's piquing that curiosity, something that's always intriguing the like it's like it has me thinking about the next move for lack of a better word. And I'm like, I love that. You know, it keeps me going. But when I first started, you know, it was like, and I didn't know what was going on. Like, nobody is born with the idea of they understand what's going on. Like, you're crazy if you do. You have to learn, and it takes time. You know, even if you learn quickly, it still takes some time. And after all, at the end of the day, it's good to know that when you first start, you don't know really what you're looking for. So you're gonna find less things familiar, and that therefore it can seem a lot more boring because it just looks like, you know, it's going sideways. Oh, it's just hold on, I was trying to show you. Most charts look like this, and you know, it's like what are you getting out of that environment? I mean, there's nothing against the naked chart, but I think that it helps a lot to be able to understand where previous barriers are, understand what, you know, what was shown as value in the past that could be value again in the future. And if it's not, then we have exact information of exactly how it wasn't used and exactly what levels it did use perfectly before, and exactly we could show perfectly what the discrepancy is. And I mean, it's just like you can either accept it or neglect it kind of thing. There's a lot in trading that's like that. You can either put a little bit of work in and have that little bit of extra, um, I guess, a little bit of extra visualization or a little bit of extra confirmation, you know, because you've got more confluence, you've got more things lining up at the same level, and because you understand that one thing is a barrier. You know, if you understand what more barriers look like, you might see that there's two barriers at that level. There might be more reasons than you think, but the more that you know, the more you will be able to find, and the more that the more that you are there, the more that you will learn. And I mean, like, I directly understand that. You know, it's like you're developing a relationship with the market's movements and understanding um, the necessity to make certain movements. And
You know, I like
yeah,
how you just explained the lines, and it hits the red, yellow, and reverses.
yep, yeah. Yeah,
Yeah,
the red yellow line is you know, it's a very intriguing one. I do believe that that level is going to have a pretty strong impact when it does break. It's just plain hard to get. And that's fine.
yeah. But if that's not good advertising, I don't know what is.
Yeah.
Jeez, actually works what you're saying.
Yep. Just changing the mouse I'm using here. Okay. So, the VWAP is the it's great that you put that in there, and it's just to go over it real quick. It's the white line there, the volume weighted average price. So, you know, when I was trading on the trading floor, basically what they called us was discretionary reversion to the mean traders, and basically, it was a mouthful, but we basically traded back to the middle. Hmm. And that means that if you're trading, okay, hold on. Everybody says buy low, sell high all the time. I say always trade back to the middle, because instead, if you know what happens if you buy low, sell high, you know what people do? They buy and hope to sell higher. That's what they do. They don't buy low, sell high. They don't even look at where it is. They don't, when people learn buy low, sell high, and then they go in and buy high in the market and expect to sell higher, it's absolutely insane to me. But, you know, always trading back to the middle, you want to know what it means? You have to actually identify where the middle is to be able to trade back to it. And if you're trading back to the middle, then therefore you are going to be high or low. You're not going to be trading from a center area. You're not going to be trading from somewhere that's high, trying to go back to, you know, trying to go higher. You're going to be trading back to the middle. and you have to identify where that middle is. And not always is it going to be interested in going back to the middle, but when it's in a consolidation, that's what its job is. Because until it's finished that consolidation, its job is to be confined between the resistance and support barriers of that consolidation. Because as I said yesterday, the definition, or my definition, of a consolidation is the price is contained within two barriers, simply put. And so long as the price is contained within those two barriers, it is in the act of consolidating. Now, of course, like we were going over yesterday, triangles are like consolidations that come to a tip. And I love these consolidations because you know when they're going to end. And obviously it loses volatility and loses opportunity every single moment that it goes on, giving people less and less and less until it's over. The best thing about this pattern is its end. Contrary to popular belief, people like to trade them all the time, and I'm like, what are you doing? Got like no movement in the tip of the triangle. And I mean, you want to know what's really, really, really funny? Nobody thinks about this, but when it moves like this, is that a triangle? How do we know it's going to end up being a triangle from that point on, huh? And it's like this area in here, oof, it's just toxic. I'm like, it's tough because you're getting less every moment it goes on till it ends. How are we supposed to find value in that? Doesn't matter what direction you're going, does it? And I mean, like, what, are you going to try and guess which way it's going to leave the triangle? I mean, sometimes it's very clear which way it's going to leave the triangle. It's just, I mean, there's always been a better place to trade than the tip of the triangle. Why hasn't that been a place of value becomes my question. And it's like when people settle for the middle, it's like there was undeniably just a better price. Because in order for it to be the middle, it must have been lower, it must have been higher, it must have been better, but people settle for the middle. And I'm like, well, come on, you don't need to do that. You choose to do that. And I guess it's, but understanding what you're doing is really important, I think, and having an introspective view on, like, okay, what have I done? What is good for me that I've done? What's bad for me that I've done? What do I want to do again? What do I want to look for again? And how can I improve on what I have done and make it even better? And might seem obvious, but it's good to keep that on the mind, keep it fresh. Obviously, right now we're not moving too much. The candlesticks are eating back into each other fairly heavily. We can see that what's the average drawback on a candle? Like, how much does how much does the last candle, or sorry, how much does every candle eat into the last candle is what I'm trying to say. Like, when we look at how much pullback one candle has into the next, it's quite significant. Which candle doesn't have any overlap to it? Is there one? Because I can't see a single candle that doesn't have some overlap to it. So understanding that retracements are incredibly common, and even in our trend right now, we can all say that, hey, this is where the trend, started today. And since we've started that trend, we've been really good at making this pullback, this pullback, this pullback, this pullback, this pullback. So I'm like, well, if that's happened 5+ times or whatever, is that our counter trend pullback? And should we ever allow for that amount of pullback to stop us out? Well, it wouldn't make much sense, though, would it? Because if you ever drag your stop within the path of it to make this average counter trend pullback, that it seems to be the appropriate amount. Sorry, the appropriate amount to pull back in this trend when it does pull back. Well, it must be allowed to pull back that much. And what could it mean when we pull back more than that much, than that amount? Could it mean that we're doing more than the average pullback? Well, it is doing more than the average pullback in the event that we do more than that. And could it mean that because we're doing more than the average pullback, is the trend in jeopardy of changing? Because it's not just doing one of its average pullbacks anymore, it's doing more. And is that a threat to the overall trend? Well, I'll tell you one thing. It's definitely gotten us closer to the trend. And the closer we are to the trend, the less friendly it's going to be with us, because the more energy we have to exert to maintain the trend. If we go sideways at this level for another half an hour, we will be forced to break the trend. So it becomes an ultimatum. where of course, you know, just like this little downtrend, I mean, going sideways is causing a problem for it too. It can't stay in this little downtrend for much longer. Now, of course, this little downtrend is likely to be eliminated before the big uptrend, and that's fine. It's a smaller trend that's contained within. But you know, a lot of people focus on what are the opportunities? How can we find an opportunity? Nobody looks at what the pitfalls can be, and nobody sees the dangers. Everybody's just too busy finding what's good for them. And I'm like, it's terrible, terrible. At the end of the day, um, understanding what the danger looks like is incredibly valuable if you want to keep what you've made, and what you've worked for. It's good to understand what can take it back instead of hiding from it or anything like that. It's good to make sure that we're really aware of every single danger, and our ability to act quickly on it increases, and effectively as well. The more that we've mitigated that risk in the past, the easier it's going to come to mind, and the quicker that we're going to be able to implement the necessary I missed the word. I was going to say maneuvers, but I mean that just doesn't feel right. The necessary actions to uh, to mitigate the risk. But we see frequently that, like I was talking about earlier, we haven't really done anything to deal with the people. This is the first thing that we've done all day to deal with the people because it's been too slow for someone. Somebody quit in there, 100%. They thought it was going to be like that for the rest of the day. Naive, in my opinion, but it is the case. Nothing we can do for them. But what's funny is they take the culture from normal work and bring it over this. You can almost count on the fact that when they finish the day, they won't even look at a chart again because they're done work. And you can't catch them working when they're off, you know. It's like that's not. It's just when I see professionals that do it the best. I mean, I just don't see that attitude, that culture. It's like they're there no matter what. They're there till the job's done. And I'm like, well, they're definitely not the first to leave. And they know what the difficulty looks like. And it's like, whoa, what? Is it because patience was required? That one folds, that one, like, capitulates under the pressure? And I mean, like, well, you could say that to develop a tough skin to that would be a virtue, To be able to withstand market environments, and if there is a market environment that you can't withstand, then why? And how is it effective for you becomes my next question, right? And why not make it a, something to make yourself familiar with, something that you can learn more in, something that you can have curiosity with, instead of putting this wall up like a lot of people do, where it's like, oh, this is outside of my strategy. I'm just going to be completely, oblivious to this movement then because it's not something that I fit in line with. And I'm like, well, hold on. That's not very effective. Because how many times do we see mix and match patterns? Like, how many times do we see, like, a little bit of one pattern inside of another? Like, the other day, we saw a W that had a 5-wave move like that. They both failed, ironically. But, it's funny to me because the W is a bearish pattern and the 5-wave move is a bearish pattern, and they both failed. And it wasn't because of the W, and it wasn't because of the 5-wave move that made it fail. It was the environment. And that environment made it clear for other reasons that, that pattern was clearly dangerous to play. But you could tell that the people that only found the value in the pattern itself, somebody got really hurt on that. Somebody just saw the W. Somebody just saw the 5-wave move. Somebody saw both of them and thought it was extra good. They probably got more. And they were screwed. And I'm like, wow. Ironic, but I mean, I remember their lesson, and I didn't even go through it. It's like that's that's the beauty of it too. I'm like, we don't need to be those people to learn from them. So, as tough as it can be to go through that, we don't we don't we don't need to do it to learn from it. We can just understand that other people have fallen for the traps that have been set that day, and we don't need to spring them in order to understand that they're there. But today it really has been pretty one directional. I mean, there hasn't been too much back and forth, and what we have come back, it's been very particular. Like no more than our average counter trend pullback. And if we do try, it's very, very wicky and spiky and just, reluctant. And here we are again with the red yellow line. I mean, you can see it kind of softened it up with the first test. The second one, we kind of made it through it a little bit. That's good. I like that. Um, it's acknowledging that we're wearing it down a little bit. It reminds me of like kind of how we got through this green zone, because the green zone used to be a barrier. It used to be something that held us up as a support, and when we could use it. It wasn't used very well, but whatever. At the end of the day, when it did come into it, it acknowledged it, had a negative response, then it kind of stepped on top of it, used it as a platform, and then launched off of it. So that's okay. Just good to know that that's the process that it decided to do, to work down a barrier, get on top of it, and then kind of conquer it. Like um in a weird way, kind of like stepping on top of what used to be a barrier. It's like, now I'll show that barrier. It's like, now I'm going to step on it, and the market does this, and I recognize it as a step. um like when I say it's going to step on it, it's going to basically get on top of it, touch it from above, and then continue moving in the direction it was moving. Now, of course, we can see we're coming down a little bit harder now. The consolidation from the red yellow line has come to an end, and you can see that we're making what looks like an M. An M is a pattern itself, and it is a harmonic pattern that allows us to apply Fibonacci tools from here to here, allowing us to get some levels. And I mean, you want to know what's funny is I'm like, not a single one of the fibs from the on the short-term spectrum was really working. I mean, what is the 341? Like, come on. Nobody's doing the 341 because it's the 341. We don't trade that level. And I mean, like, why is it reversing at it, I mean, it's not good for many people. Can't be. Because the 341 just simply hasn't been good for many people lately. It's been good for people yesterday, I suppose. That's it. And I guess that's somewhat relevant. We denied all of the other fibs yesterday to get to the 341, 361 twice. And it did it again here. You want to know what the first 341 meant yesterday? Is to go to another one. Could it mean that today? I don't think so, ironically. What I think is going on, and I'm going to show you guys right now. It might not be clear, but look at this range in the middle. This is the range we were talking about, right? We all know that that was like a standard, like, center point for what was going on. Notice that it went out of the bottom of that range by this much. Is it suspiciously particular that we went out of the top of the range by exactly the same amount, save the wick and spike? And the wick and spike is exactly bullshit. There was no movement in there. Like, I mean, look at the amount of volume that was there. I mean, like, do we really think that that was, you know, part of it? No, not really. The size of this node is the same as that. And what's funny is you can find it in the middle. Like there's here, like there's three portions. I'll make this red just to stand out for a second. You can see that's the portion on the bottom. This is the portion in the middle. This is the portion on the high. Suspiciously particular, not the work of the public, I'll tell you that right now, because the amount of precision the average individual has is not even close to being able to calculate the fact that it's made something so clear, so obvious, so proportionate, yet it's overlooked by so many. And of course, we've got fibs that we can apply from the low to high. So there's two different ways that I like to apply the fibs. This is one way. So basically, we can see that I've encompassed this entire upwards move with Fibonacci retracement levels. This means that now we can see that from the beginning of the move to the end of the move, we can see how much we've retraced. So as of now, if this is the beginning, this is 100, and this is the end, this is 0, we can tell how much we've retraced. So if we come all the way down to 50, we've retraced half of the move. Right now, we've only come down to 41, so we've retraced 41% of the move. That's how easy that is to understand. It's very, very straightforward. I color code the levels so that when we go over here and we don't have any visibility, you can. I don't expect you to remember them right off the bat, but eventually you will come to understand that these levels and their colors have absolute relevance to not having to come back and look at what these levels mean. We can understand exactly what those colors are, and I'll tell you some of the most important ones right now. So the white one and the yellow one are my favorite ones. They're the two levels that are the Fibonacci levels that I really like to use the most. But this level here, 50 is not actually a Fibonacci number. It's just half, and because people value half, it's important. It's just it's weird, but it's true. There's nothing Fibonacci about half. It's just half. But I mean, if we're going to measure portion sizes and you don't know where half is, I mean, it's kind of a problem. So I mean, it's default on everyone's. It better be. I mean, it should be. If it's not, put it on there because it's good to know where half is. And 61 is used more than half, I would say. 61 is very, very, very common. Now, just understand where 61 is in this case. It's not true that 61 is on our green zone. So that's two things that could say, well, in the event that we were to fall to that level, and it was, to exert a lot of energy getting to that level, we could assume that, you know, if it doesn't have much energy left and it's stretching to meet a level like that, we've got two barriers lining up, debatably three, including the blue line in there. Could be an attractive reversal on the 61. Now just remember that the 61 itself is always the lower middle range. It's never the best price. There's always been a better price, and the question becomes, why is one not in from that better price? Especially when the low of day yesterday was clear and it never came back. Came back a lot of the way, but it never came back all the way. So yesterday's trade for some may still be the trade of the day, where technically all of the work we put in yesterday is still amounting to not, like honestly not having to do anything today if you still have that trade. And of course, I'm not even going to get into, you know, like I said to buy here, I said to buy here, said to buy here, and I said to hold the whole way up. It's unbelievable. But if you go in the chat, just I'm not even going to go into it. I have videos and videos explaining all of those days and exactly how it's been flawless. And but at the end of the day, today we will find more major reversal levels. I think that this is a an area where we're quote unquote dealing with the people. We'll go and take a look at some of the other charts that I have in here too, because we have some other charts that could provide an insight on as to how we've been using these ranges in the past. Not so much this chart. Let me look. Um, when I see precision responses to tight gold bars like that, this gold bar is over 2 years old, and many of the analysis on this chart is over 2 years old. So for it to be used with absolute precision like that, suspiciously particular, because it's not the work of the average person, and it's like what I call a show of force by the people that have the control, because they want to like. It's funny because the other people that know that they have control can see them controlling it, and they it's funny how that the public can go every single day without noticing that the market moves a very particular way, and it's not a matter of opinion but expectation, a matter of math. And it's interesting that when you first learn trading and you first learn about, the information that people find valuable, it's not to be able to calculate results, not to be able to calculate actual like math that gives you targets that tells you exactly where you should get in, exactly where you should get out, but But makes you try and like guess, like, oh, is the company making money? Is it, like, what's this news article? Does it make me feel good? People get into the stock and then try to find ways to justify staying in, and I just like that's no control, no control. And in an environment like this, where today undeniably we are contained within a trade that I made clear yesterday, like let's just go over that yesterday real quick. I'll show you. Yesterday was I only posted a few times yesterday. So basically, one of the first things that I posted at 10:58 was this setup here, where I was basically saying when we make this the middle, we return back to it. So I was saying definitively that this price here would become the middle. And effectively, in the event that we doubled it to get back to the 188,200, which I was looking at yesterday, I was like, hey, we're going to go back to that 188,200. And I was like, well, the distance that we needed to get to that 188,200 was already here. I was like, if we put this distance on top, then we'll be there. That was my idea. Okay? And I'm like, doesn't have to do this every day for me to think that that was the appropriate move for that situation. It carried on moving all the way back up. At the end of the day, no trade from that point was ever threatened again. And as we continued to go up, I was like, hey, the blue and white line is something I find attractive for a target. So already in the trade, already moving up towards the level, and then I'm adding confirmation that you want to continue holding through the freaking roof, basically. And it did. It moved. And that trade is still in play. Now you take a look here, and this is the next post, and basically so now the 261 is the middle. No stops are safe above it. I basically say continue holding, but no stops are safe above that 261. And you can see, like, I even posted how I did it myself, where I bought, sold, bought, sold, bought, sold, 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 sold. And then basically, remember my green dash lines, they're all targets, right? So we carried on hitting all of those targets. And of course, without breaking the trend, how are we supposed to get to those targets? Just like these ones down here, eh? Like, is it possible that we ever get to this green dash line without breaking the uptrend? Well, no, 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 no. So how are we supposed to ever think about anything that's supposed to happen on the other side of that uptrend if we haven't positioned ourselves for the break of it? Because it's like the door that has to be opened to get to the target. It's like, let's say we're in a room and, you know, there is a door and, the destination is outside of that door. There's no way that we can get out of the room without opening that door and to get out of it. So it's like there's no way of getting to this target without breaking that trend line. So it's like, well, what's the use thinking about the journey past the door if we haven't even opened it yet? And I mean, like, well, in this industry, you want to be positioned from the best price possible because what is a chaser retracer? If you're late, what happens to you? The market doesn't respect it. I mean, the name of the game is to be able to calculate the reversals before they happen, to find value in what it is to hold to particular levels, because you've managed to capture exposure to the break of that channel. It doesn't matter how slow it was. We found that that was the area to be exposed to so that we could get to these levels. And then literally when we were at the high, we got to those levels. I was like, beware of some trouble around here though. A hedge could be on the table. And now, some downwards move captured. Check out how clear it is. Many people will not have made it through the simple hour of chop in the morning. Look at what was missed. Patience is key. And in that smaller picture down there, basically, you could see that I was interested in shorting it down, shorting it, shorting it, shorting it, shorting it, shorting it. I actually gave it up and got it back here. I was like, you know what? I knew it was going to come down. again, and I didn't want to give it up, so I got it back. I was like, sometimes you got to make the executive decision to do that. At the end of the day, it was the right decision. So, um,
And we're right in the middle of a gap as well, like on a 2 hour. We're actually jumping through it.
So do we think this is going to be a spike out of the bottom, spike out of the top situation since we already kind of broke through that red yellow?
um, yeah, the red yellow is something that I think we're, kind of like dealing with right now, and the idea that we want to try and get through it and test it from the other side eventually is going to be on the table. I just think that when we do break the red yellow line, if we haven't broken the supporting yellow line here first, it's going to cause problems. I'm like, let's imagine it for a second here. Let's say it does break the trend. I'm like, well, that trend is going to have to break to come back to it. And I'm like, well, does that send it right through the floor? Because I'm like, well, hold on, hold on. Last time we dealt with this
That's
trend,
interesting.
yeah, like last time we dealt with this trend, look what it did. It
Oh
did.
wait, those.
Hmm?
Yeah, yeah, yeah.
It's like it already tried, but the thing is because it's already done this, it 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 has less of a chance of doing this. Because I'm like, well, hold on a second. Everybody could see it was like, oh, everybody ran into the red yellow line. It felt it. Everybody saw that it acknowledged it. It came down off of it, and then we came right back to it, and it was like, right, we feel it again. Everybody sees the line is there. It's using it, and then it broke it, and then it was like, right, this is the huge ignition candle, daily ignition candle, and it's moving really, really hard. Then it came all the way back down for that retest with absolute precision, showing us that that line truly does exist, and it is exactly at that angle. And then basically, it was like it just basically put everyone in their place. It was like, well, a five wave move. This is just atrocious here because this is a bullish reversal pattern, and it was like five waves, and then it screwed everyone over. Just went down. This is a pattern that's supposed to go up, and it's funny that it used everybody that thought that this was a bullish pattern in a green zone too, just to top it off. They could be insinuating that it would be the bullish pattern to get it to the red zone, perhaps, and it failed miserably. And it's just good to take note of that, I guess. But
It
you
is. I
know,
do see similarities.
yeah, yeah. And then it's like after all of that, we come back and just test it with absolute precision, and now finally we're working our way on top of these levels, and it's like holy smokes, it's been a journey with this red yellow line here, eh? And now we're back at it again. I think it's due for some movements on top of it. And I mean, this VWAP up here is something that I think it could get stuck to. I was going to explain it earlier. I think I got sidetracked. So that white VWAP there is the volume weighted average price, and it's the level that basically, since we put it in, which I think was the 16th, if I remember correctly, is it's the average price of all the contracts traded since that point. So like if I go ahead and put one in here, you know, since this point, the average price of all of the contracts traded is here. So technically, if you're buying above that white line, you're getting a worse average price than everybody that's traded in there. So it's just like
Hmm.
I'm just like a little bit like I can't buy above that line. It's just there's so many other trades that aren't above that line. Why choose to make it above that line? It's like just adding significant risk to the situation, right? And I'm like, what my point is there is I'm like, let's say for instance, I explain this, right? And I'm like, here's the move, and we're getting out of the consolidation, and I'm saying, the view apps here, somebody's buying into this move, and I'm like, no, 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 and it continues going, 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 and then it all comes back. I'm like, does it matter? I mean, you found value from here to here. I'm just like, ugh, so not. That's cringe. You know what I mean? I'm like, why not from the bottom? Why not from the point that the market chooses to respect? And why don't we find value at those spots? And today, what's funny is every single spot that there has been today has been contained within yesterday's trade. And why would I give information that would settle for less than what I've given yesterday? Because I never said to give that up. I never said to give up any
Well,
long trade. Never said to
and
give
the
up any long
candles
trade.
yesterday were weird. They're finally back to long candles in the morning.
Hmm. Oh yeah, yesterday it was kind of weird. So like I use this indicator, the ATR, to be able to determine the average size of the candles. Sometimes, you could come into the computer and you make a trade and you realize why the hell isn't it moving much, or it's not effective. You're not being paid accordingly for getting to your targets because the candles are so small. This is representative of how large the candlesticks are. So on the 1 minute chart right now, on average, we're talking 11 points a candle. And that's standard, I guess you could say. I mean, if there's like that's probably the average ATR. Anything more than 12 is good. Anything less than 6 is bad. 11's pretty normal. 11's good, I guess you could say. Could be worse.
Do you think that like institutions were controlling all of that yesterday to get like people to act funny? I don't know how that would people
Well,
would respond to that, but
yeah, so the way that I saw it yesterday is we okay, so coming into yesterday, we saw that the 188 and the 261 worked really well. Yesterday, they ensured that it failed twice in a row to use fibs that weren't, you could say, they weren't used as predominant reversal levels. So you could say that average individuals that are looking in the past trying to find out what worked as the most effective reversal pattern so that they can try it again, it's like they were already late to understanding that that was the reversal pattern. And the next time that there's a juicy reversal pattern, it's probably not going to be that same thing that they saw. It's going to be something different that they're not familiar with, that they'll have to adapt to. But they won't adapt to it because they only have one strategy, and that's the strategy that they implement at all costs, no matter what, because they've been told to push their strategy on every environment, no matter what day it is. And that's why they all fail, because they only have one strategy and they don't know how to change it. They don't know how to adapt when the market is an ever-changing entity that provides different moves every single day, and they have a one size fits all strategy for every movement and every environment. And they wonder why they fail. I'm like, I can't even think about it. It makes me so uncomfortable. Because I'm like, at the end of the day, I'm like, what is it to learn the 30 things the market can do? And everybody starts way earlier, and meanwhile, they study 10 years to become a doctor, and they don't try to operate on anyone beforehand, yet they want to get into the multi-billion-dollar industry and they study for 2 weeks. Very interesting to me, but it makes it easier for me, 100%. If everybody acts the way that they are and learns off of 5 YouTube videos with the attention span of, you know, 30 seconds, I'm like, they're not going to stand a chance. They won't stand a
I
chance.
tried watching a couple of YouTube videos recently and was just totally put off. I don't know what you've done to me, but I can't listen to anybody else about this stuff anymore.
Yeah, yeah, I know. Well, neither can I. I'm like literally, like I start to feel repulsed. Like yeah, it's very very interesting.
Oh man, like literally over the weekend, I was just scrolling TikTok and I scrolled on, like, I'm not on stock TikTok whatsoever. It's all conspiracy theories. But one guy came across my feed and he's like getting into a long, and he's like, he gets dinged out because it starts dumping on him. He's like, oh, I didn't see that coming. And I'm like looking at his screen. He's got the RSI up, and I'm like, one look, and I'm like, man, you got bullish divergence right there on the RSI, and I haven't looked at anything else.
Yeah, you haven't even looked at your chart. You can see on his chart the
I
indication was clear.
literally looked
That's
at one
interesting.
indication saying it was bearish, and he literally goes long. And I'm like,
Well,
I haven't checked anything else. I literally looked at your one indicator, and it says bearish. Like,
yeah. Yeah, well, that's one thing that was interesting. Like when I first started trading and I was, trying to research the MACD, it really, really made me angry to see that, anybody can post whatever they want about it, and most of it's wrong. And because they post it with an exciting, voice, and they have a lot of friends that can share the video,
yeah, I was gonna say,
they
if you say
literally,
exciting,
that
YouTube will let you go.
Yep, YouTube does not care. If people will watch the video, it doesn't care if it's completely wrong information. And that's what everybody's learning off of. I mean, like, That's why I call it, the Google patterns. They're basically like you can call them the YouTube traders now if you want, for crying out loud. And that's what people have become. And I mean, like, I look at that as it's derogatory. It's terrible. I don't like that. I wouldn't want to be a YouTube trader. I don't want to make my profession off of YouTube. That's terrible. um, Personally, I would fear my relationship with my maker. It's like this is what I choose to do in my life, and no, no, no. I don't even want to go down that road. It's terrible. But at the end of the day,
I'm rating my VWAP there too, John, right now.
mm-hmm.
I mean, it's just slightly lower than yours, but it's around the same area.
Is it now? Interesting. It should have a kind of like an aura around it where, this should affect the volatility negatively, to be honest. It doesn't mean there's going to be negative movement or downwards movement, but it's going to have lower
Yeah. Well,
size
you look at
candlesticks.
volume now too. There's not much volume past here either, right? So it's going to go like snail slow.
Well, the thing is there might not be volume on this chart here, but when we used to trade here, there used to be like giant range right here.
Yeah.
So like there's going to be a huge volume node from here down to here. It just won't show today. So I'm really curious about that. Yeah, um, like, and I see, like, there's somebody in the chat that's basically saying, today foreign institutional investors buying 5224 cores in Indian market, and also today job data made Nasdaq Dow bullish, and I'm like, well, the data, it was already set in stone, believe it or not, before the data was released. Like, I hear this stuff, and it's exactly what they want you to act like. They want you to talk like that. Like bullish today, job data made Apple, Amazon, Microsoft, Nvidia, Google, Salesforce, Netflix, Tesla, soon all global markets to the moon. Because of this job data, you really think that that's going to be why it moves up? You think that the job data is why all those companies are going to go up? Because and I'm like, I just can't hear it. I am completely against that, and I do not think that that is why the market moves. I don't think that the information that you've been provided on Market Watch and on CNBC is correct. I think that that is what average people go use, and if you want average results, then you can go and learn with that average information. And I do not, I just can't hear it. It's just like kills me inside when I see them all flocking in the herd, and I'm like, it's herd mentality. Conformity killed the cat, not curiosity. Curiosity, it keeps you it keeps you it keeps you on.
Conformity is boring, man.
Yeah,
conformity
Curiosity is
conformity is
fun.
it's a
dangerous.
puritanical saying anyway. I'm not a Puritan.
Always just gotta lean into it, man.
Yeah,
Lean
conformity is
into it.
dangerous. Like I look at it with a very like open mindset, where it's like you want to make sure that you take the variables of the situation that are facts, not statistics that have been created by other people that work as a job. So like they create these statistical pieces of information that they could be incorrect on, first of all, and then they create a paragraph on how it affects the market, but they can't tell you for sure. They can't tell you that there is a barrier there. They can't tell you that there is something tangible there. They can tell you that maybe this matters, and maybe that over the course of multiple years, if you try and find a similarity between them all, that maybe every time that there's been bullish jobs data, that all of the stocks have went up like this. Well, why is it that I can find you an environment where bullish jobs data has made the market go down? And if you say that it hasn't, that's incorrect. So at the end of the day, I won't hear it as far as I can. I won't trust it as far as I can throw it.
So I'm going to reiterate what you said there about crummy statistics out there. As an actual statistics teacher, college level statistics teacher, there are so many things where, and I'll just use the most basic example I can, where somebody will say, well, A plus B equals C.
Hmm.
Here's B, so C must be true, and they never show you the precursor, that A, where and it's all their feelings and these things that you can't put into numbers, and they want to treat it like that's actual math with actual numbers, and it's not. And there's so much crummy statistics out there, everything from customer surveys to whatever, and it's all based on they don't show you where they got half of their stuff, and it's just their feelings.
Right. Right. That's quite interesting.
You're a stats teacher?
Yeah, I taught stats for psychology, and then psychology of sustainability at the local university.
Oh, I was gonna say it's probably university, right? So like,
Yeah,
I was told that in America the state lotto donates every year to like the schooling, like the school districts and for each state. Like so they donate X amount of profits,
yeah,
but then they don't actually teach kids about statistics until you have to pay for it in university.
that is true. Only recently did I start seeing even the barest minimum of mean, median, mode, and standard deviation, which is the foundation
Oh,
of statistics.
yeah,
I only
literally.
just now saw that in fifth grade math book.
I'm just saying the organization that takes that whole business plan revolves around statistics, donates profits to the school district, and they don't even teach statistics until university. Like they want you to play lotto, man.
Yeah,
Oh my
because you
gosh,
don't
yeah,
because you don't understand the statistics. That's the idea. They haven't taught them to you. If you did understand the
Literally,
statistics, you would never play the lottery.
now I
their
will tell
odds
you,
of
if
dying
anybody offers
blown
you a
away.
billion to one odds, you take it. Billion to one odds, you take it. You give them $1 to win a billion, yeah, every day. But that's just
100%,
throwaway dollar, right?
or I should say a billion percent. Well, yeah, throwaway dollar. Yeah,
But don't go. I see people making their whole lives out of it, like they've got a plan and a strategy to do the lotto, and I'm like, no, this isn't going to work out. Best to play the random numbers to do the random
people
number dinner.
play. Yeah, like people play religiously at shopping malls and stuff, and they get the exact cards they like, and they think they're gonna hit it big. And yeah, that's crazy.
Well, I mean,
Well,
yeah, there's
for
people that
scratch
drive
cards,
different time zones.
And how
yeah,
do you
but
know that they
scratch
don't?
cards have different statistics, so there has to be so many losers before there's a jackpot winner, right?
Yep. So you'll ask, if you go up to any of the people selling the scratcher tickets, you can straight up ask them, "Hey, has anybody won out of this?" And a lot of times they know. And if somebody's come in with $100 winner, you don't want to buy that ticket. And that's why there's like 30 different kinds.
Yeah, and the Monopoly, the McDonald's Monopoly game. There was a long-standing rumor since I was a kid that said half the tickets were on the West Coast and the other half of the tickets were on the East Coast. And so then when Facebook came out, all these people were selling their Monopoly tickets for McDonald's map on Facebook and shipping it across the country.
Oh yeah. Some people got in trouble too. Employees got in trouble for like lifting the tickets and giving them to family members to turn in for prizes. We're talking out of the factory, not out of like the store.
Yeah, I've heard of that too. Yeah.
Crazy. It's crazy how they don't teach more statistics, man. Like I feel like more people would be a lot more successful at whatever they're doing.
Oh yeah, I feel the same way about economics, general economics, like not any of this fancy flash in the pan economic stuff, but real solid economics, and then some statistics would go a long way. And then
Like
how do you do your taxes?
a
Because
base, like a base, like give people a base. Like, what's a corporation? How are you taxed? You know, how
right,
can you avoid full taxation by going other routes and stuff? Like, yeah, I don't know.
yeah, I'll tell you, my sister is principal, local elementary level, and she says there's a great disdain for all things teacher and education related, and about 40% of parents just don't care, and they don't believe that school's going to lead anywhere, and that's awful and scary. We're talking first to sixth graders.
What's crazy is that people who are considered teachers who teach children, if you look at their bank accounts, their money management skills are is like right out the window. So it's like the people who are teaching the kids should be like ground zero for like those people should be able to, you know, handle themselves in society, manage their money, kind of like
Well,
you know,
those people are out there doing that, and like, if they could be doing that, maybe they would be. Because the people are too busy doing that to be able to teach children. They're too busy managing their businesses, too busy doing their lives
and
to be
the
able to do
amount
that.
that teachers make, man, they spend out of their own pocket to do things for their for the kids. Like that's
Yeah,
crazy
they
Yeah.
to me
make a
too.
whole
Oh
lot
yeah.
comparatively.
Hmm.
I never
And
knew.
They
well,
used to though.
Yeah,
I mean, if we could rewind maybe 50 years, they had a pretty sweet deal, at least in Canada. They
yeah,
have
my
that.
teacher's got a great retirement, but that's about all. You know, she got crap pay for most of her career until she got into admin.
Yeah, I think that because of the fact that their whole pension fund here has done the best out of all the pension funds for any of them. So the teachers have done well, but I think that because of that, they've had like people they've taken a lot away
do
from
you know
them.
what happened to the
Yeah.
Ontario Pension Fund for
What,
teachers?
it got wrecked or what?
Well, the Ontario Pension Fund for teachers was invested into FTX.
Oh no.
Yeah, the entire like they were early investors in FTX, and they I think were like within the first 50 donors on the list of people who lost a shit ton of money.
Oh wow.
Literally says the
Well,
And now
Ontario Teachers Pension Fund.
I wouldn't doubt because they were ahead with that, they had some rules put against them, and now that they're behind, they have those rules put against them and they can't get ahead anymore. That's kind of like what happened in the States, I think, like they were
Well, that's
ahead
the
so much
weirdest.
and then they had all these rules put up against them, and then then COVID happened, then it was extra hard because everyone thought they were ahead. And it's like now they were
yeah.
behind, and I'm like, now they're just gonna have to
When
lie their
I
way out of that
released
one.
that list of the FTX
They're pretty
victims,
good.
man, I read the first list, and some of the names on there, like corporation wise, just weird. Like funds and organizations in which people park their money, where they believe they're getting a constant return of like X amount of percent, or
And
that
they never
it's
see their
being
money.
guaranteed, and all of a sudden some moron in the office decides to go invest that whole pension fund into a crypto fund. Like it's insane. My jaw hit the floor when I read that. When I read Ontario Pension Fund, I was like, no.
Yeah.
So yeah,
That's wild.
Yeah, that's terrible.
I mean, yeah, that's
Well,
people just got sold a bill of goods with a lot of that stuff, and man, there's a lot of bag holders these days.
it's interesting. It's the people that are the most victimized are the people that demand security out of other people and not create it for themselves. That's the thing. Everybody relies on their company to look after them and stuff, for the government to look after them. Why don't they work and provide enough value in the marketplace as a human being to be able to sustain the rest of their lives? That's what I think, is respectable.
well, a lot of a huge reason why a lot of these people were like so pissed off at celebrities for pushing FTX and all that. It's like these guys got paid millions and millions of dollars from these crypto organizations, and it's like
Celebrities should
where'd
be
they get
taxed more.
the money from the people, right? So, and then all of a sudden, celebrities are coming out saying, "Oh, I lost money in the deal." I'm like, man, you made 15 million.
They don't even
Like,
provide any
Right.
value to the
barely that.
economy, so I think they should be taxed incredibly.
Like Kevin
Entertainers
O'Leary,
as well.
prime example. He was going out crying, "Oh, I lost 15 million in the deal. I didn't have anything given to me." Blah blah blah. I'm like, bullshit.
No, I tend to agree with you. I'm fairly, what's the word, iconoclastic. Uh, I don't like fame or celebrity. I think it's probably the worst thing ever.
I
But
think
I always
you
felt
should
like
be
I was
famous
cynical. But
for great work. Like gladiators back in the day, they were famous because they were good fighters. You know what I mean? Like not because they have a shitty personality. If you have a shitty
oh, right.
personality, that's just unfortunate. Like, but I mean, if you're a mean killer, I mean, who cares if your personality is shitty?
I mean, you're right. There are some really good performances out there. Not, we're not talking Marvels here. We're talking, but there really are some good performances that like evoke that emotion. That I'm like, yeah, that's a cool talent to be able to do that. But also, I only watch it once and I'm done.
Like, I wish great watchmakers were famous, or like physicists like Michio Kaku. He's like 70 years old, and he's like kind of like father of like string theory. Like those guys, like I wish those guys were famous.
Well,
Like
No
literal
kidding.
celebrities.
they don't make people feel enough. That's not good enough for most people because all they want to do is get 30-second
People don't
bursts.
listen to them
You
though.
know, honestly, if they were provided with like, with drugs, they would all fold under the pressure of them and become junkies. Not a single one of them would have the mental ability to be able to work their way through anything. I just think that they're all emotional junkies is what I'm trying to say. They all
Humans in general.
yeah, yeah. Everybody, that's what they're turning into now. I'm like, I just see it all over the
Yeah.
place. And it
Closely related to Jim Carrey, I'd say. He was playing that character, and after a while, he kind of went crazy because he realized he probably didn't know who he was because he's playing all these different characters. And
That's
you go
yeah.
Ridley.
Robin Williams was the same way. It's a sad story, but funniest man on the planet wasn't happy. So,
Yeah,
and it's
Well,
got a lot to do with
nobody cared to make him laugh. I feel like everybody
yeah,
wanted
that's it.
him to make them laugh, and I think that's rude, personally. So
yeah. So
I would have never
there's a
expected
story.
him to make me laugh if I met him. I would have thought that would have been rude. That's like,
But if you're a
yeah.
mechanical engineer and you're working on something and you're having a hard time, it's like you can go to your other engineer buddies and work on it together because they got that same skill. But if you're the funniest man on the planet, who the fuck do you go to laugh?
It's
Yeah,
funny.
especially
Nobody's gonna say
if,
you.
It's
if
ironic,
you make
really.
it
That's
sound
what
like
it
a
is.
brag.
It's ironic.
When you're at that level and you're that kind of person, you start talking about things or complaining in general, and people think you're bragging, only whatever subversive bragging, but it's real stuff. So,
Yeah.
You're like, I
humans
need
are.
help, and they hear bragging. Yeah, I get it.
But that has everything to do with that emotional celebrity culture that we were talking about. It's just you know everybody expects that dopamine hit when you run into or hear about these certain things, and it's no good. It's addictive too.
I want the physicists to grow long hair down to their butt to come up with a new, like, really cool material, and then like we all buy tickets to go watch them on stage to like throw their hair around or something playing guitars. Like it's
Huh.
pretty cool.
Huh. That's an interesting thought.
If they're gonna present a new material to us that's space age, hell yeah, I'll go like it's a rock star show.
So,
I do I do like watching some of those like you know um, tech demo things for that exact same reason. Because I mean, while the crowds aren't as big, there are there's some hype there, and I like that.
so on a side note, we are gonna see some change here on the market. I do believe the
Oh, you had
consolidation
to
is
add
coming
something
to an
else.
end. What's up?
We're somewhat
I was
consolidating on
all
the
off
bottom of
track.
this.
I was just making fun of myself.
Only VWAP here.
Could we do the same maybe distance on the top of the VWAP? Because you've got that green in the middle of the two blue dotted lines, and it's
Yeah,
somewhat symmetrical or same distance away from each other. I was just wondering maybe we could reach that.
we could be interested in doing something like that. You do have to watch out for the VWAP up top too, because it can, essentially this sideways movement. Is this where your VWAP is there, Randy?
Like that whole consolidation,
Uh-huh.
it's right in the middle of it.
Oh, yeah, see,
Right in the middle of it.
that's good.
Yeah.
Good. Mine's a bit high.
It's going a little sideways for me to think that we want to go down right now.
Well, it's got like 1 minute
It's
left
going soft.
with this trend. I mean, it can't continue this chop without breaking that yellow line. So the ultimatum is coming soon. It's not a matter of
It's a case where you like that trend line because you didn't move it or push it out to that other those
yep.
other candles that came down, right?
Yeah, yeah. Yep.
I understand that this time,
Mhm.
but I still push another candle or I still push another line out
Yeah.
just to see where it goes, right? So
Both of them. Yeah, they're both different trend lines, yeah. That's why I've come to look at them.
okay, yeah.
Because like in time, like they do become so far apart and different. Like a week from now, they'll be like high of the chart and low of the chart completely different. But yeah, they'll both break today most likely. it would be incredibly difficult to make it to the close without having broken them. Like if you think about where the close is, it would have to be all the way up here, not to break that line today. So I mean, like, what are we gonna go up 1,000 points to stay on this steep trend line? I'm like, no, it's breaking, 100%.
Could you put a line from that wick on the left across?
Yeah, yeah. Usually I like these lines when they go through them though.
Oh, I don't even put it on the first one. I actually put it on the second one first, and then I dragged it through on the underside.
Yeah, no, I wouldn't put it
Like
underside
as
here.
support, like that.
You
Yeah,
could.
something like that.
Yeah, I mean, it's a different. I think that this line is good for like it does make sense.
Just like a retest sort of deal where it's like this might be the shelf that it holds up on.
Yeah, I mean that's fine. It's just a different kind of line. It's like a channel line. It's like these lines can be related to each other in a strange way.
And if you notice the 1 minute RSI is coming down, but the price is going sideways.
Yeah, that's typical of many consolidations like this when we've got a lot of upwards movement and then sideways movement will kind of tarnish the momentum.
I mean, even the MACD is coming down and it was going sideways. So
Yep. Yep.
What does MACD?
Oh, it's this one up top here. This
And what do the letters stand for?
oh,
I could have looked it up, but
moving
I thought.
average convergence divergence.
Okay, I'm gonna look
yeah,
that up and read about.
Yeah, so basically the moving averages are the lines and it talks about the convergence and the divergence, which means, when the price is diverging from the indicator, it's going away from the indicator and this is going away. So like this is moving down and this is moving up. And then let's say for instance, they were converging, this would be moving in and this would be moving in, and they would be like coming together. And basically, right now we can see that the price is going up and the momentum is going down. And that basically means that the price is struggling to continue making new highs with this new momentum. It's kind of losing steam is what that's indicating. As we continue to go higher, it's becoming less likely that we'll have the steam necessary to make it to that next level and to continue advancing in the same way. So basically, when I can see that it's making new highs on the short term here and making new lows there, it's effectively a bearish divergence, and it puts a lot of stress on whatever trend there is. And if we can see that, this is indicating downwards movement, and this is still coasting sideways or going up, it puts a lot of pressure on that uptrend, and basically means don't be surprised if it breaks because of the downwards momentum that there is. And time typically, what this is saying is the more time that we spend at this level, the more negative it will impact, or more negatively it will impact the momentum. So it means that this consolidation is having a negative impact and will continue to have a negative impact as we consolidate. So maybe if it's impacting it negatively, and we can say that that's a fact, maybe we haven't impacted it enough. How much time do we have to go sideways for before it's impacted significantly enough to be able to break the trend and change it? That becomes the question. So it's like, sometimes we get a really strong bearish divergence where it's absolutely clear that the price is going up and the momentum's going down. The momentum always wants to lead the price. It's the one that's indicating what the price is feeling essentially, how much strength and momentum the price has is indicated by the MACD and the RSI. That's what they are. They're strength and momentum indicators.
Huh.
And
Okay.
yeah,
All right.
yeah, they're used for confluence. So it's like, let's say for instance that we're running into a level that's supposed to reverse the price. You can go ahead and flip this up, and then say, all right, is it also showing that it's losing steam in conjunction with running into the barrier? But of course, we can see all those levels just broke as well. As I was mentioning, they are very
Yeah, I
likely
got
to.
to talking and things happened.
Yeah, yeah, yeah. So it's good. We managed to come back down to do the retest of the red yellow line as well. I do think that we'll see those highs again. So just a matter of time. The blue and white line is something that I find could be on the table. It is, after all, coming to us in time. Like even if we were to spend time at that consolidation level, it would only take until here before we hit that level. So it's hard for us not to get to that level. It's almost like we're going to have to deal with it. Like if I put it in another perspective, if we don't deal with it by the end of the day, I mean, this is the end of the day right here. It could totally use that time, but I think it's more likely that we're going to see it today than not. And I mean, what are the odds we spend all day tomorrow not going through it as well? It's very unlikely. We would have to make significant gains in order to maintain the progress with that trend. Which, like these ones, the steepness brought the weakness, because at the end of the day, the steeper the trend is, the less time that it has with it. Like I was saying with this trend at the very, very bottom, it's got what, a 3-degree angle, and basically it is barely coming up off the ground, and we've got so much time with it. But it's also a fact that until we break that line, it is undeniably in an uptrend, because that is the trend. Until it breaks it, we're in that trend. And obviously we can make a downtrend to get to it, but it is contained within that uptrend. Every trend that we have now, until we break that trend, will be contained within this uptrend. And it's really interesting to see that no matter what one of these lines we break, it doesn't take away the fact that we're in an uptrend, because we're in this one. And that's an interesting factor, because we've got a lot of space to be able to move around, and it's not likely to threaten the overall uptrend, as every single downtrend that we form is in jeopardy of breaking. And this one here, short term, but it is the downtrend as we have it. And until it breaks, we will be in a downtrend. These ones, they've broken. They've lost their ability to provide um, the same kind of value as an unbroken trend, but they're still good for retesting. So they don't. It's not like they don't exist anymore. They still are barriers in the event that we choose to run into them again. But they're not going to be in the picture for long. And obviously, I've taken a lot of the emphasis off of them. And again, with this red yellow line, we've managed to test it multiple times just to get above it and then break back beneath it. Everything is subject to returning back to the blue and white line. Just like yesterday, I removed the blue and white line that we were targeting yesterday, and I made it a darker blue line to insinuate that it's older and used up. And this one is new and captivating and hard to miss. Could we make a right shoulder? So it is true that in this environment we have a high with a higher high, and in the event that we make a lower high, which would like be basically using this node, it could make a head and shoulders. Doesn't have to, but anybody that is short must make sure that they don't obstruct that pattern from happening. At the end of the day, it's a risk that we're at a neckline. The shoulder doesn't have to form, but at the end of the day, it's good to make sure that the trade is safe if you do have one. Of course, this is also a B point. This level right here, we've essentially moved from the 161 down to the 100. Which I can go ahead and remove those now. And put a new fib set on the low to high. We can see, just like we pulled back before, we made a 38% retracement. The 50 is closer to the blue and white line. And the 50 is also the deepest part of the volume profile. At no point has there been lower volume than at the 50. And that was the point where it was moving the hardest, which when I see that, like I can see that at the best prices, typically we don't have much volume. And I think that that's because of dark pools personally, but basically people buy or institutions buy people's shares on other exchanges. So it comes off of the ordinary retail share exchanges and onto dark pools exchanges and effectively doesn't show up as volume on the ordinary people's charts. And I think that should be illegal, but it's the way we have it set up as human.
As human beings or institutions?
Yeah, well, as our human race, we allow that this is the way, the people that are on top to stay on top, and the people that aren't to have information that doesn't provide value to them, yet they think it does. And they learn the hard way. They don't have enough time to rectify it by the end of it. Seems many people are caught in the same problem. There is a blue and white line here now. We can see that that has been returned to. Effectively, that is the target for many of the hedge trades that taken, as well as the any short trades of the day. Now we can focus on the yellow downtrending line a little bit more. Having hit the blue and white one, it basically reduces the amount of interest I have for it, as it's already used up. Doesn't mean it won't be used again in the future, but basically it's not something that I'm actively interested in making a target. Obviously, we're very close to it, so the market is showing us that everything that it has done today has been a relatively large spike outside of the original confinement area, which is here. We started the day by making moves relatively similarly out of the top and bottom of the range. We just made an even clearer advancement, which I find an interesting portion because that seems to be the portion that we use down here right before we did this one. That was the first distance that we made off of that green zone. It just so happens to be the distance that we made off of the red zone. Suspiciously particular, definitely not the work of the public, but the work of those that have the control. That is my philosophy. Is that people that have control have the ability to move the market, even though it is illegal to move the market for the interests of your own positions. They know how to do it in a way that's not.
But like, wouldn't that be technically trading? Because why wouldn't you trade if it's not for your own interest? But you can't trade without using money, and the money moves the market.
Yeah. They have certain securities, I think, that make the market move more, just like preferred shares. I think that they're not available to the public and they're available to institutions and they trade them all the time. And the market respects those orders and that volume a lot more than the random nature of the herd mentality that we see out in the public. And it's like if they're not conforming to the other ideas of the YouTube traders, they're conforming with the bank, mutual fund managers.
Wouldn't be surprised if some hedge funds or, you know, just funds in general had like this sector within their company that just made Reddit groups and Facebook groups and like literally start things like Wall Street Bet and like, you know, push people towards a certain uh, sector in the market to fluctuate. You know what I mean?
Oh yeah, yeah, I wouldn't doubt it. I don't think it's illegal to own media companies and push media out that's completely incorrect information. Even statistical lies can be presented, and it's
I
not
remember back in
illegal.
the day when Amazon was just booming, like when they were just starting to get the huge market cap around like 2011 ish, and Washington Post always talks shit about Jeff Bezos. Jeff Bezos goes ahead and just goes buys the Washington Post, and I thought that was kind of weird. And then you realize like, oh wow, you own the Post, you own the narrative. So
Yeah.
yeah, I wouldn't put it past them, starting Facebook groups and Reddit posts and stuff like that. So
Yep. Be surprised. I wouldn't be
even the
surprised.
obvious guys, the money shaker guys on CNBC and
Yep.
all those guys. Yeah,
And it's one thing that's interesting is if it worked, more people would do better. Like I say, the focus is on the yellow line, and there is time. If we exert all of our energy running to the yellow line, will it have any to break it? Is it acceptable for it to consolidate? Well, what's the price of going early and not being able to break the trend and not being able to get through the targets? I mean, it chooses to fight battles that it can't win sometimes, and it is undeniably coming up off of a neckline, make what could be construed as that right shoulder, what we were talking about before, a high with a higher high and a lower high. Like I said, you don't want to obstruct its ability to form that pattern, which means if in the event that it is to replicate the size of the left shoulder, it will have something to do with this node. I can't help but notice that we're responding to the low of it. The left shoulder was at the high, and the red yellow line is also at the high. In time, I do believe we will be on top of that red yellow line. Just wants to make sure it has the right people in first. And of course, anybody that's still holding from yesterday is, there's no better place to be in than from the bottom. And if it hasn't come back to get people at that bottom, then it's higher that people have had to settle for. And that's intriguing to me because it's like, well, what could compel somebody to get out and then get back in at a higher spot? It's quite interesting because that's basically what today is saying for like the many people that are associated with the lows of today. The question would be, what happened yesterday? The 50% retracement was used relatively well, and we can see that all of the exciting part that was blasted out of the range was retraced back to the range itself, as every single move that we've ever had today has been associated with coming back to this range. There's not been a move that we've had since the open, or even in the pre-market session, that hasn't been associated with being a wick or spike out of the top or bottom of this middle range. And what could it mean to change that? Well, it could be a great change. In the event that we don't have any association with this range anymore, the characteristics that we're using to keep ourselves in this range come to an end. And I do believe we are closer to the end of the consolidation than the beginning. Well, closer to the end of this range being used than the beginning. And even today, I can see that the consolidation that we have had is remarkably similar. Like, notice that this node right here is contained very well within the same confines that we were using yesterday. The appropriate consolidation size, with which they did put a node inside of, was exactly the same size as our range from before. Or take a few points. I can't help but notice that the 61% retracement of the downwards move is likely to be at the high of the node. Let me double check that. Yeah. So my mental measuring tape, I can see that this 61 is roughly the size of the left shoulder, and it's also the high of the left. It's also the high of the node. So something that could be seen again. And in the event that we break the yellow line to get to that particular level, it will be a head and shoulders by the point that it gets there. And just because it forms doesn't mean it has to work. Head and shoulders don't always go down. How do we make 3 drives patterns if head and shoulders don't fail? Because 1, 2, and 3 is definitely a pattern. It happens countless times. See it on the short term in here many times. And 3 highs are very, very common in our current market environment. Same with 3 lows. But this is also a pattern. But notice that in order to form this pattern, this one has to fail. What pattern can this pattern fail into? Not necessarily capable of failing into something. So, at the end of the day, it's not, it can fail, it's just it won't be another pattern. And I'm like, why are the things that people find first on the internet subject to being picked on the most in 2023? Like a double top. How many double tops today have failed? What happened to this one here? This one? This one? This one? This one? Why are we above it, right? Like every single one of those highs that's a double top effectively has been met with difficulty, struggle. And I'm like, not to say that they don't ever form, but you want to know what's funny is we can always look at them in a different light because this is an M and it means something, it means a pattern. And it can be traded with a specific entry target to a specific exit target. Same with double bottoms. Do you know that double bottoms can form 5-wave moves as well? So how do you know that, in the series of a 5-wave move, do you know that 2 double bottoms have to fail in order to make this simple pattern? So careful with those patterns because it's not like the market's like, really, you think it's supposed to be that easy? It's like, no, 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 no. This person clearly doesn't want to put any work in at all. So give
Hey
them
Jeff,
nothing.
you consider that low at 1048 B point, just above the red yellow,
1048. Let's take.
the one up top there. Yeah,
Um,
1048. Yeah.
That's an
Yeah,
interesting one.
yeah,
I do like that level because of the 61 area, the high of the node, but it's a little higher than those
sure.
levels.
Yeah.
I do think we'll see it again though.
Okay.
So, how do you arrive at that green line? Like you had talked about, maybe that's a B point, but what exactly do you mean there?
So a B point, we're referring to this pattern here. So when we have an M or a W, uh, they're actually XABCD patterns. This one's a bullish harmonic pattern, which looks like an M basically, and like this is the outline of what the price will essentially do. And we can see that we have one here, for instance, like an M,
Okay.
and there's quite a few in there. Like there's like uh, W's and M's that we can see all across here. Sometimes it's constantly moving from an M into a W. Sometimes we have
Hmm.
like moves like this, and some of them can even be pretty deep like that, where the B point can be a little higher. There's different variants of these patterns, which basically tell us that because it was constructed in a certain way, it's more likely to have a specific reversal point for the D. And basically, what I do is
The
I
B point. Oh, because it's a B.
yeah, yeah. Mhm. Yeah.
Okay. All
So
right.
so basically what I do is I like to apply Fibonacci's from the B to the C, and that plots these lines on there, and I change it to harmonic so I get just the levels that it can reverse from. And
I did
effective
not know how to do any of this till just now.
Yeah, and effectively it does plot these levels in so that we can target them for reversals back to the B point. And I just mark the B points with these green dash lines just to emphasize that they're actually uh, the origin point and that point or the target that we're looking for. And essentially, each time that I plot one of those green dash lines on there, that means that we can apply fibs to that level and see what levels are appropriate to come back to. Now, like yesterday, not always will they be interested in reversing off of
Yeah.
the same levels, but sometimes they're really lining up with a really important area that makes a lot of sense.
Yeah. Well, it's just kind of funny. I take all of this information in little bite-sized chunks and sort of don't pay attention to everything because
Mhm.
I'll get confused.
Yep.
And I was just like, well, no, today might be the day to figure out what exactly they're saying and why they're saying that, because
Mhm.
that's not something you can look up.
Yeah. Yeah, as well as when you look up the pattern itself, it's very difficult to draw these and get the indication out of it. Like right now, you can see that from the B to the D, there's a 1993. That's basically telling us that it's 193% retracement. And I mean, you can see that that's the 200 and the 188 there. When I draw it in, I just look, okay, I'm like, I don't need to know that it's the 1993, right? Like I'm like, okay, it's at the 200. Because if I was to draw it right up and actually hit the 200, then it would be there. But like, people will be finicking around with this indicator, being like, "Where am I? How is it? Like, is it supposed to reverse at the 188.6 or something like that?" And then they'll try and get the exact level, and it's never exactly that level, and it won't feel right to them, and they'll be messing around with that shape. So I leave the shape out, and I just draw these in, and I just draw the B point in there, just to avoid these big patterns being drawn all over the place, and sometimes they look funny. Like an M, it's like this, right? And it goes up, down, and it does that. And in this environment here, it went up, down, but it doesn't look.
Yeah.
It just
Yes.
I just wouldn't want to draw this on there. It would look all weird, right? Like
It
if I
wouldn't come across right. Yeah.
yeah, it would look like that. And I'm like, well, it's first of all, it clutters the chart, and it doesn't provide any levels that I can actually trade at. It's something that always shows us that that was a pattern that worked in the past. And
Okay.
yeah.
Do you ever define like the B point on an M or a B point on a W, or do you just call it a B point and
Hmm.
look at the chart?
Yeah, just call it B point and look at the chart. Yeah.
Okay, all right, I can do that.
Hmm.
Like I said, I'm just I didn't really know what you all were talking about, but that makes a lot of sense now. So thank you.
Yep, yep, yep. The B points are the green dash lines. And I drew this arrow here to show, like, remember when we were getting close to the trend break before? Now we're getting close to the trend break again. And just like things could change there, I could see that we spent roughly the same amount of time consolidating in this little area here, using the same kind of confines even. I mean, like, that just seems appropriate. And then when I'm like, okay, we can see that it started with this consolidation, or sorry, with this spike here, and that looks like it kind of started that spike there too. And I'm like, well, is it doing the same thing or trying to? Sometimes I find that it tries to do things that are absolutely precise, but it honestly has the people in the way of it. The public in the morning kind of like everybody jumping in at random location kind of distorts the ability to move with absolute precision. Then we get towards the end of the day after a couple consolidations where you can count on the fact that people have quit because they don't have the integrity to maintain through the consolidations. And basically, then it starts to move so clear, and you can tell it's not the work of the public because it's using absolute precision reversal levels that involve actually, you putting in the levels and doing the work to get the reversals. And most people aren't interested in doing that because they just want to be paid instantly so they can go back to the beach on their laptop, right? And not have to work. But the professionals, they're like working all day long trying to make sure that they have a constant understanding of what every part of the day looks like, what every consolidation looks like, what every single slow and fast area looks like, so you can tell if it's about to happen, you can tell if it's close to what happened before. That's security for me, personally. Understanding all of the environments, not having any kind of uncertainties, understanding that the slow is necessary. And look at how similar it is. If you just dig into it for a second, you can see exactly really how much time and movement, like this little area that we had, is replicated again. And then it even came from exactly the same kind of spike that we saw there, and it's the same kind of thing. And like, that's just acceptable for it to do that. Of course, if it's gotten this far into it, could we expect change at the same point? Well, of course we could. But a lot of people aren't looking into it that much, so it's just going to look like when's it going to end? Nobody knows. It's just infinitely going sideways. They don't know what to expect, so it drains their energy. And they think that this is because if you take an action on this movement and the market gives you this, if you're expecting it to move and it goes sideways, it draws energy from people. And they get closer to quitting because that's an option for them. But do you know that if you work at a hedge fund and, do you think that because you quit that day or because you stopped working that day, or the fund is going to disappear? And all of those assets that you've been accumulating from the 60s and the 70s and the 80s and the 90s are just going to disappear because you stopped working? Well, that's a luxury that the individuals have when you can sell your entire portfolio and then just go and buy an ice cream cone and be an individual. But the institutions have to sit there and manage those billions of dollars of assets because they can't just liquidate it into cash. Because if they tried to, they'd lose about 20-30% instantly. Because everyone would see that, oh my goodness, look at these people trying to sell billions of dollars on the market. How's that going to be interpreted? And they'll be lucky to even get filled on their positions. So it's like they have to find a way to keep those positions and mitigate the risk. That's why they call themselves hedge funds, because hedging is one of the best tools to mitigate risk. And it's not a tool that's used by the individuals very often because the individual can't see past their own strategy. Yet billions and billions of dollars are being made with absolute clarity, and people still choose to guess because everyone else is doing it. And that's what I see. 'Cause there's no reason to really like act on anything but absolute certainty in the market. But if they don't know what that looks like, I mean, they're going to be easily convinced by what they hear, right? So my goal here is to make sure that when there is an opportunity, the door is so clear that you can't not walk through it at the end of the day because the information is so clear, because the target is so clear, because the entry point is so clear, because the environment is so clear. then you find yourself part of it, and you can take advantage of what you found clear. But other than that, what could be acted on if not that? When is it appropriate to act on something that you don't understand? I say never, never. So that's the interesting part about it is a lot of people will just think, oh, because the companies are making money, because the jobs data has been released and it's bullish, or because somebody said it was bullish, because somebody used the word bullish, and they say, okay, the market went up today because of the bullish job data. People can interpret that as, oh, this person thinks it's bullish, but meanwhile they were just stating that it went up. So that means that people flock in, FOMOing, to be late on the trade because they don't know what a real reversal looks like. That's what I say. So they don't know what to wait for. And if you don't know what to wait for, how long are you going to wait before you do something? And how do you know whether that something's going to have an impact? You just can't bear the weight anymore. That even losing money is acceptable at this point. I mean, like, ah, how human is that, really? It's so true. Very, very human. I mean, I don't know how many people are going through that, but having the patience and the discipline to actually monitor, to analyze, to understand, and to find that clarity, find that pattern, to find whatever it is that you're seeking, whatever you fit in line with. It's very important to understand, to know what you're looking for, so that you can implement a plan that has a target, a destination, a risk reward profile. It's really important to understand that you're risking less than the reward. Every time that you make a trade, it's not good to risk more than what you're going to get if you're right. Like if you're risking, you know, $1,000 to make $100, that wouldn't make any sense. But $1,000 to make $5,000 would be something that might catch your interest. It's in a hypothetical situation. Obviously, I think that the profit and loss is something that doesn't impact the progress of the trade. I think that it will never tell you how to get in and out. It'll never tell you when the trade is over. It just tells you when you feel that it's good enough for your livelihood. And the market will never be able to tell when that is. So why use that as a point to get out of the trade? And if you can see that, you know, before you even get into the trade, exactly where you want to sell the trade, exactly where you want to manage the trade to, makes it that much easier to follow a specific guideline to be able to get to that trade. Like in this case, or to be able to get to that target. And in this case, we've basically broken the yellow line, come back to retest it, and now we've continued beyond the point that we retested it. That's the process of a trend break. First, we ignite through the trend on the ignition candle, then we come back for the retest, and then we have the continuation. And just because we understand the moves doesn't mean you really have to be a part of them in this case. After all, if you're still long from yesterday, you're exposed to every upwards movement that there can be. You can focus on hedging. And if you've caught the hedge, you're waiting for that hedge to be knocked out so that you can continue holding your long core. At the end of the day, that's been the play every day, and I think that it's been the play for the people with all the money every day. How do you not think that they're going to be holding assets and trying to hedge them every single day? Because you think they give their assets up some days and then buy them all back on Tuesday? No, they're not like an individual. They're not like that. So they have to find a way to mitigate risk throughout the journey that they hold those assets. And they're interested in keeping the control of those assets, not giving them up. Because when you own those assets, that means you have control of the company. You can fire the CEO if you have all the shares. Now, why would you give that control up to your competitor? Only if you could find a way to stay in and make money off of the decline instead of actually giving it up and folding under the pressure of the profit like the individuals do. Very, very interesting to me because I can see they hold themselves accountable. They stay in the position, they manage it with strategy, with intention, with expectations, not with hope or with guessing. I call it hopium, and The most popular drug in humanity right now, in trading. And it's a terrible one because it means that the moment that you have hope, you have no control because you're not relying on anything that you have that's like tangible, factual, any kind of information that you believe in. Nothing. It's just maybe this will work out for me, and hopefully the market doesn't chew me up and spit me out, right? And that's no way to rely on. How can you be consistent and have that be the way that you think? It's just, and do you think that the institutions wake up every day thinking, oh, maybe it's going to be bad for me? Maybe I'm not going to be able to manage the assets. Maybe I'm not going to be able to find an accurate spot to hedge and to remain safe before my assets can continue. But do you understand that they're playing it in both ways at all given times? They're always long, and their job is always to manage that long-term upwards movement. But they're also finding every single short that there is throughout the day to manage the risk of holding that long. And everybody else is all like, I'm going to get in here and then just sell my whole position and then get out and then get back in here and sell my whole position. And then they wonder why it's difficult for them. They didn't hold because the bottom has been the easiest price to hold. All of this upwards movement has been captured by anybody that just held yesterday's trade. And I mean, you could say that about last month's trade or last year's trade. At the end of the day, because it's not like I said to give it up. I said to hold the daily lows every day since we've made them. And I have every day recorded too, just for proof if anybody ever wanted to know. Literally, I record every day because it's unbelievable. So if anybody wants me to pull up any single day, I can pull it up and show you that that day was a successful day and that this was the right place to be at the end of the day. And of course, some days like today are contained within yesterday's progress. And why would I offer you something less? I'm just like, I'm dying inside. And it's like, why didn't you hold what the good thing was, the good thing that I offered? And now we all want to be in from an area that's like the middle. And I'm like, it's killing me. It's killing me. Killing me. But that's the story of the year, you know, because where we are right now is very, very, very high, close to all-time high. And going long from here after I've said to go long many, many times and hold many, many times is kind of like, it's just killing me. We want to make sure that we don't settle for less than the best. And does it offer the best all the time, or do we have to have patience for it? How many times has it offered the biggest move of the day today? Well, it's offered a really, really nice dip from the high once, and it's offered a really, really nice pop from the bottom once. Anywhere else is subject to being overlapped and a retracement. All of the exciting parts that were very, very, strong movements get overlapped, and those are the people where those are the places where most of the people find value, because they didn't find value at the actual reversal points, or we would find more volume there. But at the points that the market truly reverses, look at how much volume is up there in comparison. Look, the people at the very, very top were buyers. Like, what's that? Who are they? Like, who were the sellers then? Was it because the buyers were buying, and essentially the people that were selling were actually on a different exchange that's not provided to the individuals? We don't get to see that volume, but I'll be damned if you tell me that there's no volume at the actual reversal points. There is, it's just not on your exchanges. It's not for the people to take advantage of, but the institutions that make the calls, that decide where the volume is, that reverses the price, and they make sure that the people are not there or they will not reverse it. And until they're gone, they don't reverse it. And that's the case every single day. That's why it takes so long at the beginning of the day to weed out the people that don't have the integrity to make it to the end of the day. And that's why we can see that at the end of the day we get so much movement, and it will change, because people will make it part of their routine because they think it will always work like this for them. And as soon as the people start flocking in, we won't see it anymore. And I anticipate this, and it will be the case. But you know what's funny is it's lasting for such a long time, because when people are done, they close their computers and they don't check it again. They don't have anything to do with it because they're done trading. It's like they've clocked out of their job. Nothing can make them trade again that day because they're done. It's like a culture. People literally like conform to that way. and they see somebody else doing it, so they become that way because they think that's the way to do it. I think it's wrong. So literally, like most of the things I think people do are wrong. I do, and I'm contrarian, I guess you could call me, sure, but I'm like literally against what most people do, and unless you want to end up like most people, I mean, you should be too. Now, of course, we can see that the motion that we've made here, it's like a head and shoulders, and effectively, the head and shoulders lately, it's been what it's been known for is making an inverse head and shoulders, which is the exact same pattern in reverse. This is a way that it can consolidate. It's a way that it can make a triangle. And it's a way that it can cross the same spot 8 times. Now, you want to know what's funny? Is by this point, a lot of people will think that the market is going down. This is where we're going to screw most of the people, to be honest. Because just like when it was in many of the consolidations where nobody could find value, and then they give them this big, exciting pop, what just got taken back? And how's it any different to what happened here or here or here? Even in some cases, you can see the small little areas will get huge retracements back to them. Even this area here got a retracement back to it. Even this area here got a retracement back to it. Even this area here got a retracement back to it. Here, and it's not always like this. Don't remember this is something that it's always going to be, but this is the way that this area is. And when this area changes, this can literally end. Every single characteristic that we see here ends just as everybody's getting used to them. And then everybody starts to spam this in and actually try and do the thing that it's been doing the most, and it will fail on them because they will not adapt to the change. They will literally adapt to the thing that's been happening because they think that that's the most effective way for the market to move because it did move like that. And it's not the way that it will move, it's just the way that it has moved. And people get that really screwed up, because the way that it moved 3 months ago might be the way that it moves next, not the way that it moved 10 minutes ago. Because when we break this trend,
Coming off the 161. Didn't go down to the 188.
that's interesting, the 161, because we went to the 161 of the major B point too. So it's like there's been common 161 reversals today, but I can't help but notice the confluence of the green zone, the gap, blue line. I mean, it makes a lot of sense that today everything was separated away from that green zone and the red zone with pretty much the same distance. Like we can see this movement here is the same as the movement that we had here. And it all had to do with coming specifically right back to the triangle, or sorry, right back to the node. And the node itself was also that size. So I'm like, that's suspiciously particular. And curious about that. But it looks like we've just used that green zone as support as it was intended to be at the beginning. And what is the green zone related to, and where did it end up going? To the red, as it did originally. Now, could it be that we make the same triangle that we did when we were here before? After all, it could only be a consideration because of the fact that we've actually made this here before. Maybe it uses those same angles again. Because what is a triangle if not three angles? Triangle, triple angle, triangle. It's got three angles, and effectively, those angles are effectively trends. Two of them are trends that we can use potentially in the future. The other one is a distance, not completely to be disregarded, but that distance is something that we can see potentially that we've used many times before. Obviously, it's the distance of the range itself, because that's what we That's the range when we made it.
So
And
is that distance related to the size of candles sometimes?
um, yeah, sometimes inside of these pullbacks, we can see that the size of the candles can be similar, but throughout the day, the size of the candlesticks typically decrease. Like I'll show you this
Oh
chart.
yeah, I forgot.
Yeah, and then they have an increase at the end of the day though. Like let's take a look at them real quick. So at the beginning of the day at 9:30 every single day we get a huge increase in the size of the candlesticks. Like here today, it went from 4.92 average candlestick size to 15 and then it coasted off. And like on another day, yesterday, um, you can see a clear increase at the open again and roughly went from 6 to 14, but then at the end of the day we had that little bit of an increase again. And we can see that it happened again here, same kind of shape that forms. And then again here, same kind of shape that forms. Some days, these were the 2 days that were really low volatility after the holidays, but um, some days there's events and they can make it look a little bit different. So we can see now that the green zone has continued to lead us through the high of the red.
I came off the 61 too, John? I just
This
realized that now.
the 61 to the entire move up, eh?
Yeah, yeah, yeah. Because remember you had mentioned the 50. That's why it came to my attention.
Oh yeah.
But you had another purple or blue line in there too, where it went to?
A blue line, yeah. It was from yesterday. That was the blue and white line from
Oh,
yesterday.
jeez. I didn't see that. Okay.
Yeah. Yeah, the blue and white line from yesterday.
Yeah. Good.
Mhm.
Yeah, it's huge to
Morning,
understand the
everybody.
lines.
How we all doing?
Morning. Good.
Hey, morning. So basically what I was talking about before we did this move is that we will make the head and shoulders to inverse head and shoulders. So the move that we make out of the bottom here can make this inverse head and shoulders. And like I was saying before, like I've come to understand this as like this is a schematic. Like I'm drawing you a schematic. Like you could look at this like it's a Wyckoff. Like you're supposed to make one move up, two move down, three move up, and it has to be higher, and then a move down. So basically it makes a head and shoulders and an inverse, and we know that it goes 1, 2, 3, 4, 5, 6, 7, 8 times at the same level. How is it not a consolidation? And what I look at is I'm like, well, look at this area as somewhere that it's contained within the middle, and then the spike on the top is equal to the spike on the bottom that we can have. And my sketch is a little off, sure, give me a break. But the middle can also be the same size. So these are characteristics that I like to see here. Now, it's not the case really with this one. The shoulder looks funny and everything like that, sure. But in a perfect world, we have seen this many times before, and it hasn't always had this kind of tarnished right shoulder, I guess you could say. But it's really important to understand that the spike in the top and the spike in the bottom can be the same size, and that size spike can also be the middle as well. And when we see this, it's almost always the case that we can form a triangle around the whole thing. And when we leave triangles, we know that we can actually spike out of both sides as well. We can continue to see that spike out of the top and the bottom. I wouldn't put it past it. At the end of the day, um, not obstructed by the public, you could see the people in control attempt to move the market like that.
I was just noticing is that the ATR is still quite nice. It's at 10, 10.2.
Hmm.
I mean, we've had like 7 and 6 the last couple of days. It's been good. This particular junction too, John, is that the 1 minute's kind of running into the 15. Probably push up, but I'm just saying it's got a little bit of resistance there on the RSI.
Oh yeah, let's take a look at that. So basically, we're running up into the 15. The blue line is the 1 minute, the short term momentum, and then the orange line is the long term momentum, which is basically the slower line, and then the faster line is more representative of what we're currently doing, which is the price, the one that sticks closer to the price, and we can see that that's being obstructed by the long-term average. It's like the short-term momentum is being obstructed by the long-term momentum, and sometimes, you can see that that can have a negative impact, but other times we can get on top of it. Lately we have been getting on top of it quite well, but this is the longest time that we've spent below it, like for a noticeable period of time, and it's also the highest that the long-term average has been for the longest time, and it's obviously come down a bit now, but when have we had this environment before? And I can't help but look when we were last at a higher point. That's when we could find some similarities there. But you can still see that when we were at a higher point last time, it's not like the orange line was at the high even. Isn't that interesting actually? Like the orange line, which is the 15-minute, is never really at the high. Okay, over here it was at the high, and that's when it was actually like way up there, right? But then I'm like, okay, that's appropriate though. Like we weren't ever higher in the immediate area than up there. And you can see that the momentum was really high and we ran into it and it was affected negatively, right? But is it the case that we're in that environment now? Well, we're significantly lower than what we were then, and it is that means that it's going to be easier for us to get on top of it because the line actually isn't at the extreme anymore. That's just like on the 15-second RSI when you see that one of them is at the extreme. It's that much more likely to actually have that reversal that has the longevity. And the clearly the same is the case with this. When we actually made the very very high, it was the case that everything was high, everywhere. The momentum was just screaming up on all cylinders. Everything was at 80. And like on the spectrum here, you can see if I hover over this point, you can see that there's numbers here that represent the scale, and 80 is really high, right? So you can see 20 is really low, and it's just good to have an idea of what it looked like last time it was at 80 and exactly what it looks like when we meet 80 and we're not at an extreme. Does it have the same impact? I would almost certainly say that it doesn't have to. It has to be used in conjunction with something else. It's not something that can be used by itself only. It's something we have to make sure that we're seeing multiple different levels correlating with that as well. It's like it could be considered like a cherry on top almost, like to a situation where it's going to reverse. You would want to check to see if that's in line with what you're thinking. And in this case, I'm weighing towards this wants to get on top of the orange, funny enough. And like I was mentioning, the head and shoulders to inverse head and shoulders, we might only see like we might struggle to make that right shoulder. Like, is it not true that when we made the head and shoulders, it struggled to make this right shoulder as predominant as the left? Like, it was like this was a nice left shoulder. It had all the volume and it worked, really well there, and it was an M. And look at all the volume that it had, right? And then we come over here, we do the right shoulder, it's like all like decrepit and stuff like that. And I'm like, well, I don't I don't think that the inverse has to be proper as well. I mean, it could be all weird and not correct on the right shoulder too. Maybe it wants to just make a small one. Maybe it's the range of the small right shoulder. At the end of the day, because it's a fact that we did make a small right shoulder, and we could continue to make small right shoulders until we see otherwise. So is it allowed to make a small right shoulder? Or does it only have to make a big one? Like, of course, it must be allowed to make a small right shoulder if that's what it's shown that it's doing. And how could it negatively impact anybody in the event that it does make a shoulder? And if there's a risk that it makes a shoulder, why would we position ourselves in a way that could have, effectively treat us negatively or cost us our position in the event that it formed? So I'm like, what that means in an easier light is just don't drag your stop within its path of making that shoulder. Let's say it wants to do a proper one and make a big one. Don't let it cost you your position. Ensure that you're taking some off so that you can afford any kind of pullback, because if you don't take any off at the neckline, if you do have a position from this range or from this reversal point, it would make sense, because if you if you don't take any off and it starts to pull back, and let's say for instance it makes a three drives pattern, you've just wasted your time. But if you've taken some off, then at least you've paid yourself. And then you've earned the ability to hold whatever you have left. The more that you take off, the easier it is to hold what is left, because there's less risk in holding it. Like for instance, if you took 3 at the bottom and you managed to take 2 off, what you hold left, if it goes to 0 or goes to like 5 points, what you're only going to be playing with the house's money basically. Like you're just basically essentially playing with the profit that you've already made, and you're keeping your exposure because it doesn't cost you a drawback on your account to do that. It allows you to retain some position for further value. Yet, in any environment that happens, your stop will reflect your entire account as a profit still. So let's say, for instance, if you've managed to take in 1, 2, and 3 at the bottom, and you've managed to take 2 off, like essentially, what does that mean for the last one if it goes to 0 or a small profit, like 5? Well, essentially, what you choose to take off now will effectively mean, if the last portion is not able to hold, then you're safe on the entire endeavor. And it's just good to manage it like that. So, it alleviates any emotional struggle, because of the fact that, I believe that the only reason why we worry is because we don't understand what could happen. And I think that having a clear outline of exactly what could happen in every outcome is really clear. And at the beginning of every trade, there is some risk that has to be taken. Now, if the reward is great enough, the risk can seem minimal. At the end of the day, we can choose which trades we want to take part in. There's plenty of higher risk trades that don't offer more movements. There's a lot of those that come around, but we also have the opportunity to wait for those higher probability trades that can become they can also be larger trades as well. And there's less frequent reversal points for larger moves, because there has to be, like, effectively, it just works out that way. There's a lot of short-term moves. You can choose for those moves to be good for you, or you can wait for the longer-term ones. Now, interestingly enough, sometimes when you have to capture a long-term move, it could involve a series of short-term trades. In the event that we reverse in an area that has, let's say hypothetically 11 consecutive new lows, yet the target is 12 times the entire size of the original consolidation. The value of being exposed to the end of this consolidation is high. Let's say you know that here. What are your options? Are you going to choose to buy here and be wrong for this entire time, or have the patience to buy at the right point? Because at the end of the day, is it true that it's going to reverse for Warren Buffett here and it's going to reverse for you here? Or is he going to have to wait this entire time too? Or Jeff Bezos or whoever your favorite person is, or trader is, and I'm like, well, at the end of the day, they're all going to have the patience to wait for the one reversal the market demands that we wait for, no? So at the end of the day, some people can find value in only the best point. Some people can settle for less, and some people are comfortable with taking a risk sooner or more risks or whatnot. But we have an option to understand like what is the actual reversal that we find value in, and do we have the capacity to wait for it for that proper condition and environment to get there. And then when it arises, we have to have the speed and versatility. The we have to have a management plan quick enough, like to be able to enter. You can't be fumbling around with a platform or something because you don't familiar of where the buy button is or the sell button is or how to put a stop in or anything like that. All of those things have to be second nature because you're going to be doing them every time. So what's the value in practicing? That's the thing. And I'm like, well, it's like after having, you know, made progress on a live account, I've noticed it's almost inhumane for people to go back to practicing. And I think that that's ridiculous because you look at how many professionals are out there that do their work or even like sports players and ask them about how important practicing is in order to remain at the at the top, and to ensure that even if you're not practicing but monitoring or understanding what's going on is really important. And not always does it have to be good enough for you, but it doesn't mean you don't have to neglect it. Like this movement right here, it's not very good movement for anybody that's associated with it for the past like 15 minutes or whatever. It's literally been very slow, candle to candle. Every candle's had about a 95% retracement into the previous candle, right? And each candle's been very small. We can see that the ATR has essentially taken a little bit of a hit down to 8.5, 8.4 now. So we went from 11 points in average candle size down to 8.4 just because of this little range. The average has been affected that much. Now, it's not like the average can't go up again. It typically does for the end of the day. But like as far as I can see, like it is doing the thing that it should be doing. The inverse to the head and shoulders. It's trying, as best as it can be. And I did mention the right shoulder could be like decrepit and small and weird and everything, and it is. I mean, look at it. Look at this thing. It's not our left shoulder, that's for sure. But if you look at the proportion size that we had here for this major left shoulder, and then look at what we did for the major right shoulder, is it not true that we basically cut it in half? Maybe 61%, you could say. And then I mean, like, well, let's look at this one. And what did we do here? And did we cut that one in half? Basically, it's splitting hairs kind of. But maybe a 41%, which is ironic because what seems like it's remaining on the other side was that looks like a 61 to me. Like if I analyze this whole range right here, where's the 61? It's right at that point right there. Now if I take this range and put it here, where's the 61? Oh, here. Mathematical phenomenon. But it's only calculated if you look. And you can see these portions are literally the same. We're decreasing at the same rate in this area. And when do we do that? We do that in triangles. And people won't think that this is a triangle because there's a giant spike just hanging out of the bottom of the triangle. So it doesn't look right. You can't draw a proper line on it, so people don't do it. But there actually is a triangle here. And I think that it's like this. Basically, we do have an uptrend now. We can ignite these ones over here. No, they're not going to be really used much, I don't think. So we can reignite this one. Put this one up on the top. And it is true that this area provides a confinement zone that is triangular, and until we break one of those lines, the support or resistance, we are doomed to be confined until the tip of the triangle. But by the tip of the triangle, it is a fact that one of those lines will have to break. So is it true that we should have the patience to allow it to consolidate until the tip? Well, of course, if it wants to trade in the triangle until the tip, it can, but undeniably, once it starts to get difficult to retain inside of that little area, we have to understand that it's going to be getting ready to leave. And one of those triangles is going to be getting ready to come to an end. Now, this is considered an indecision pattern or an indecisive pattern because there is two lines that it can break. Not that I'm indecisive of it or that there isn't a way to calculate which direction it's going to go, but it's not because of this line or this line that makes it triangular. Sorry, it's not because of this line or this line that tells you which way it's going to leave. Now, a lot of people will think that because they've plotted a line on the top and they've plotted a line on the bottom, there will be some sort of indication out of the line. But there isn't an indication out of the line. It's just a fact that this is the resistance and that this is the support until it breaks one of them. Now, you want to know what's funny? Is when one of them does break, it is the fact that the other one becomes the trend. Like I'll show you in a visual example. In the event that we break this trend, this is the support now. Like there's no more indecisiveness about it. It is a fact that when the triangle comes to an end and this line breaks, this will be the uptrend. This line will fade away. It'll be like, well, whatever, it's done, it's broken. This is the trend now. Like that. Now, in the event that the other side breaks and it went down, well, this would be the trend. And this one wouldn't matter anymore because it's a broken trend line. And until we break that downtrend, that is the downtrend, and that's a fact, and that is decisive. But while we have two lines, you can't really say that it is in one specific trend if it's in both. Like it's in this downtrend. Well, not anymore, obviously, but well, when it's inside the triangle, it's contained within a downtrend and an uptrend at the same time, which is the case until it ends. And every triangle comes to an end, obviously. Every triangle has a visible end. And what's funny is even though we leave the triangle, does not mean we're done the triangulation process. Like when we finish a triangle, one of the most common things to do is to return back to it. One of the most common things to do around triangles is actually S waves. And what's funny about these S waves is in the event that it makes either one of these moves, where inside of the triangle are you safe to have traded it? And remember that when it makes this move here, are you aware that it is a triangle? Because what about this right here means that it's a triangle? We see this all the time. Do we know that this and this here literally is like a 5-wave move? So what about this is a triangle? And that's interesting to me because you can see that in time, it can carry on to identify as a triangle, but this move itself is not like nobody trades it in anticipation of it becoming a triangle. Like why who would it be good for? First of all, like who wants it to be a triangle? Like obviously it's not going to be profitable for people that are short really. It's not going to be profitable for people that are long. It's going to stagnate in between the best prices. And then let's say it goes on and does this move when it finishes and pops out of the top of the triangle, just like you can see, kind of like what's going on in here. It pops out of the top of the triangle and then wipes everyone out, and that was in this part of the consolidation, and then wipes everyone out at the bottom. And I mean, like, okay, option B is that we go to the bottom first and still wipe everyone out of the bottom, and then come back up and still wipe everyone out of the top, just like we did in here. So why is it that people find value in trading inside of the middle of the triangle? And look at all of these people that just did that. All of the people in the middle, look, huge node. Just because the market dishes out crap doesn't mean you have to eat it. That's my saying. And at the end of the day, it's it's uh it's clearly good enough for all these people, and all these people have settled for this. And look at what the market has given them. After all, I understood this point was likely to be part of an 8 sequence consolidation where we cross this point 8 times. And I mean, like, to do that at any point is a long time. I mean, it's not like this is, it takes like at least it takes some time to do that. And it's ridiculous. But honestly, it's a waste of time after if you can calculate it and see that it's going to do that. It's like, oh my goodness, you know, it's like, could we please do anything else, right? Great thing about this is it's almost over. Another thing, is God forbid you thought it was going to do something else and then it ends up doing this to you. It really drains people because you sit there hoping and hoping and hoping that it's going to do the thing you thought it was going to do, and then it just keeps going sideways. 8 times does it meet the same level. And you know what's great is there's a great chance that if people are just randomly buying and selling, they land in that area. Because think about how much time it spends at the best price. It's not as much time as what it spends in here. Now today was kind of interesting that it had that consolidation for so long there, but there is a VWAP there, as Randy was saying, so I'm like, okay, it makes a lot of sense.
Yeah,
And
right on it.
yep, yep. I think that I think we could get that same VWAP by like putting a short-term one in here. Yeah, that's pretty close. Pretty freaking close.
That's it.
Yeah,
Found it. Yeah, it's identical to mine.
nice. Well, that'll do for now, because it was bothering me. But
No, I exactly what on there. Well, the fact that it rode the top of it too, right? It's just like it was right on it. I mean,
yeah.
fact that it got back to it, it's very
Mhm.
good.
Yep. And I mean, it's like it's listening, like it's exaggerating the moves around the tip of the triangle just to wipe everyone out yet again. You know what it does, right? It's making sure that anybody that's traded in this area is overlapped as a loss at some point again. Like they've taken everybody that's traded in the area here and then overlap them with this loss and then this loss, depending, it doesn't matter if you're long or short. This move would have got you if you're long from this area. This move would have got you if you're short from this area, unless you caught the very, very small spikes that it made out of the top. And you can see how many of the people did, because there's not very much volume in those spikes. Nobody caught them because all the people are comfortable with trading in the middle. And what did I say at the beginning of the day? There's no money in the muddy middle. There's no money in the muddy middle. That's a tongue twister, but you'll remember it. Love it or hate it. That's the idea. That's why I say these things, because I'm trying to get you to remember them. Because there's a lot of information, and I'm like, well, there's no muddy. There's no money in the muddy middle. Sorry, is the way to remember it. Or don't diddle in the middle
You can
as
you can
well. There's
trade in
no.
the yellow zone too in the volume node. Only trade in the yellow zone, then you're better off too, as opposed to trading in the red zone.
Right, but you do have to watch out for when we're in the midst of a long-term move, because the market might not stop in the progress of that long-term move, and like
Mm-hmm.
every short-term reversal point can just get, like, they just blow right through them some days. And I'm like, well, the days that we can identify that it indeed is consolidating and it is coming back to a specific level multiple times, it's we can say safely that it comes back to this level more times than it leaves it. It'll only ever leave this level once, but every other time that it has ever moved, it has always come back to this level since it began. Like every move that we've ever done has always either ended or began at this level since we've met it. But since we ran into this level, which I mean, this level didn't exist when we originally ran into it, which is ironic, but since this level became a thing, it was never able to make a move away from it without coming back to it. And only one time will we be able to do that. And how many times have we come back to that level? 100? I'm like 50? I don't know. Too many times. There's a lot of times there, and you don't have to count. But I'm just saying, there's so many times that it's returned back to that level. And if it's too many to count, well, what are the odds that you know? What do you think the idea of obstructing its ability to do that would be? It wouldn't be very wise to obstruct its ability to do that. One thing that we could say would be specific, though, is when we're contained within a giant triangle or something like this. When we have a giant triangle and we still haven't broken out of it yet, it's safe to say it still can use that triangle. And until we end the triangle, we could be using that range. And right now, we're closer to ending the triangle than we ever have been before. So we're closer to that time that it does not come back to this level. We're closer to the next time that goes the farthest away from this level than we ever have before since we've met it. We're closer to being able to move farther away than we ever have before, which is not very much. Oh, that's interesting. Do you know that there's an untested B point down here? And moving the exact distance away from this point that we had on the top to the bottom would be that B point. Suspiciously particular. I tell you, I did not intend for that to be the way. I just drew it on there and it ended up lining up. So what is the value to making this spot the middle? I mean, is it trying to be the middle after all? I mean, on the short term, it has been the middle more than any other price. There's been one move on the top of it that does not have a counterpart, I guess you could say. Like it doesn't have the other move to make this the middle. Do you know that that's the only move out of any move that we've made here that hasn't happened on the other side? Do you know this move right here happened right here? This is the only move that we haven't doubled. And it's so funny because that'll go right through, right over the head of so many people. Because at the end of the day, it literally has moved back to this line every time it's left it. And there's only been one time that it hasn't made it even. One time. It was the biggest time that it hasn't made it even. But every other time, it's been the middle. So, is it convenient that the only untested target to the downside would make this the middle in every faculty, like every single way possible? We would be able to make that the middle if we met that level. So what's interesting about that too is getting to that level would make it the case that the day is this. And it's funny to me too, because that is the way of yesterday. The best price to be in from is here. Now remember, moving up on ducks, right? They don't really look like that today, but essentially like consolidations like this that are like that, you can see what I mean by that. And essentially it takes back that move. And that's what Randy was saying, at least to remember it. I think it's great to remember it like that. After all, the consolidation is the area that the people struggle to find value in because it's going down and it's at the bottom. There's been no signs of reversal, and everybody sees the reversal and they want to be part of it. They FOMO because they don't find value in the actual reversal area, or there would be more volume there. But look, the people that actually reverse the price are this amount of volume? Psh, no way. No way. And people just believe the statistics and the volume that's presented to them, and they think that that's literally like all of the people. I'm like, no, 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 no. The institutions can trade on exchanges that aren't even available to the public, and it's legal. Like, we should have exchanges that they're not allowed to trade on. Literally. It's like, what about that? It would be too fair. Like, that's inhumane. It's tragic. But maybe the future will be different. We can see we've had a decline off of this level now. The red zone has been working as a support, which is ironic because the red zone isn't supposed to be a support, but it's a terrible resistance level, isn't it? Think about it. At, at the only time it's ever been used as a resistance is here and here. The only times that we've been able to run into it from under as a barrier. Every other time it's been stepped on. And you know what that shows? To me, it shows that they've kind of conquered that level in a strange way. And it doesn't mean we can't get wicks and spikes through it and such, but like they've turned the otherwise scary resistance level that in the past was prone to giving us big dumps and being the high of the consolidation. And why treat it like this now? Why is it like this now? Different. But yet the people that found value in shorting at these levels before, I mean, they're in danger to think that those levels are working the same way, right? It's interesting when you think about it like that. But what worked for them is not working anymore. And their strategy must have changed because if they dared to, do the same thing again, expecting the same results, they were presented with literally looks like an equal amount of loss towards what they made on the gain. And when I look at this just like that right there, it's not true that we have a spike on the bottom, a giant consolidation, and roughly the same size spike on the top. What that reminds me of is when we used to have a bar like that, and I could see that the spike on the bottom would be generated out of the top. A little bit more in this case.
You think we're going up further from here, John, since this is an inverse and we're just working on the shoulder, or do you think it's going to spike down and then go back up?
I'm leaning towards the spike, but I think it's an incredibly risky area to add to the volume. Like, I look at this as like the people of the node. You don't want to be a person of the node because you're being put in the spot where the institutions want volume. They want everyone to be here. They want everyone to get sick of here. They want everyone to enter here and then feel the drag of this place. That's the interesting part about it. And I think that the initial move that we make out of this spot, it could be a move that comes right back to the spot. Like, remember how we just looked at that move and it had a spike on the bottom and then it had like a channel and it made the spike on the top? It could be making a smaller version, like, of what I just drew on the bigger picture. And that entire move would get sucked right back down, I think, if it did form. And I'm indifferent about it. It's almost certain to provide value on the first move that exits this consolidation, um, more than what it will offer those that choose to trade in the consolidation. And I'm like, what about the 61 of this move right here? Because that's the left shoulder level. And I'm like, if we made it to the 61, that would be this level. And, it would be proportionate at that level, but it hasn't managed it yet. Curious about that. Its confluence suggestive that the right shoulder has something where the left one was. And of course, like, even like whatever pattern it makes right here doesn't take the fact away that it's in the middle, and it's just not good enough for me. Like it's convincing everyone to trade right at the 50. I'm just like I can't. And it's also right at the tip of a triangle. So I think it is the riskiest to have an opinion at this point. And I think that patience is key, even though that has been the key to the entire environment. Like I say, there's no one key to trading, but it's a whole key chain. And you have to, everybody's interested in just refining one key, and they're all just like, "Oh my God, I got my one key. It's like this is my strategy." And I'm like, "Well, you need a keychain. Different key for different day, different key for every environment, different key for how to manage the trade, how to find value in even getting into the trade in the first place." Because clearly what happened yesterday and worked for the people yesterday is not working for the people of today. So you have to find what the right way is. And honestly, the way to play today is to have held yesterday, ironically. But that's been the case how many days now? And it's interesting that yesterday's play, um, it was all contained within a move from the previous day. Friday, and it's high at 1253. Never seen. The best value for this dump was to be in from Friday, no? And it's like that's the interesting part. It's like and it's hard for people to be positioned like that, right? Like you can count on the fact that people aren't going to have the integrity to maintain a pullback that's all the way to the close. This is 1600 right here. The market closed here. So it's not like they were able to hold with much profit. But just remember what this high looks like right here and the daily high. Is it not true that it spiked at the high and then it came back and it came back and it came back and it was tough for those people? But is it not true that this is the best place to have shorted it? And look what it did to those people that had that price. Look what it did to anybody that tried to find value in being short. It chopped the crap out of them and came back nearly on them all the way. And they had to have the integrity to maintain for the break of that trend. And you'll find all of that in the chat if you scroll back every single day. I'm absolutely proud of it. Every single day down here, every single thing that I've said about the market from this point, that's when I started the group in March. Actually, no, I started the group in March here, which I was saying to go long right there. And I'm absolutely proud of every single thing that we've done along the journey. But essentially, the environment that we have right now, like I was showing a minute ago, sorry, is very much like that daily environment. Oh, sorry. You know what I should have done is taken a picture of it. So notice that the high on Friday, um, it had that same kind of approach to it where we started out and it had a spike, just like on the daily high, and then it came back to it, came back to it, came back to it so many times, but it held that high just like it did here so many times before cliff diving. And even on its way down, it came back to test it like that. And I'm like, same kind of thing here. Suspiciously particular. That test that we had out of the top of the triangle looks like it was used out of the bottom shortly after it left. So the spike out of the bottom was what I was leaning towards, and that's what happened. Effectively, it's a terrible place to have shorted it from, but if you did short it, you make sure that it's very, very much protected. At the end of the day, the consolidation did end to the downside, and the spike did form out of the downside. But if it is a spike, the entire move is subject to being erased on the break of this line. You know what? We're gonna leave it like that. Most dangerous line in this environment, because guess what? This line's broken. There's absolutely no value other than to retest, which is minimal value. And then this line, same thing. What we're left with is the downtrend, and until that downtrend breaks, that is the trend in question. And could it be capable of reversing off of the B point down below? I do like it. So, at the end of the day, making that happen is absolutely fine. It's got a node down there that it could rally off of as well. So, effectively, in the inverse head and shoulders is subject to turning into a 3 drives. At the moment that we pass this low, this becomes a target. But only if we pass this low, which it's like a contingency. Under no circumstance, like, wow. Now that I think about it, I'm like, well, if we don't pass this low, it's going to be kind of hard not to get there anyways. It's pretty much likely to get back to that high. And I mean, what if it goes from the red zone to green zone or green zone to red zone? Would it get to that low? Yeah, it would. It would. And there's no description of the through the movements of today that there even is a range here. If you look at the volume, there's nothing that from today tells us that there's even anything here. The market demanded that we recognize there was a range from yesterday here in order for us to understand that that was a resistance and a support, or a barrier and a barrier. And today the market's been very good at making things even. And I think that that's its goal, is to continue having that be the case. We do have new B points as well. This one up here, I do find it very likely that it manages to get hit. It can be a little tough about its reversal, but anybody that's holding from the beginning shouldn't have to take any risks to be exposed.
For 241A to that B point, that green one.
Interesting.
Yeah, and of course your line again. I wasn't looking at that, but
Hmm.
I should pay attention to that more. Added confluence, but it's so much confluence going on. I mean, it's like
Yeah, and I don't think that it's going to be used too much more, but if it is, it's likely to be used well. Um, that kind of line you can just plop it in. It's pretty easy to grab.
I'm gonna have to.
And you know what I admire about this line that I think is kind of overlooked, and I think that it's double test. Um, Sometimes we can get this on both sides, but in this case, it looks a little bit tighter than when it was originally used. But I can't help but notice that when we used it like this, it was kind of like the same kind of movement. It it tested it twice, and I mean, like it began the relationship with this, it could end it in the same way. And I mean, this is very much similar to how it used it at the beginning. I know it's not exactly the same way, but hey, one thing that it did do that's actually similar as well is it ran up like this really hard, came down and chopped like crazy, and then moved down and made the second low. And I just want to point out that that movement, we'll just move it down here so we can see. Let's look at what happened on this move. Is it not true that we kind of have a similar situation where it made a large move up, a large advancement off of it, and then it came down, and then it chopped to come down again? And that kind of motion was replicated with the large move up, then the large move down with the chop, and then the drop, and that's how we managed to get to that line. And I mean, you want to know why I think that's relevant? Is because by the point that we're at right now, it finished. So could we expect change when this series of moves comes to an end? And what a better place to start a new trend from than the end of of a series of movements that, and that's basically the logic behind it. Is like, of course, if it's going to be finished its sequence of consolidation, or if there's a certain way that it likes to consolidate, like an 8 series move or something like that, it finishes those 8 moves and then starts a new thing, which could be another 8, but at a different level maybe, or something like that. Maybe a smaller version or a bigger version. It just expects us to understand that that's what it's supposed to be doing. And right now, the red yellow line, like I said, we're attacking that pretty hard. We've come back to the red zone off the green zone exactly like we did originally. I just gotta run the washroom though. I'll be right back. Watch for a retest on the break though. I'll be right back. Basically, we come back to the red yellow line after having a small negative response. Now this trend, it has been formed at the POC essentially, and when we made this trend, it fake braked it 3 times, and then had 2 negative responses after those 3 fake breaks. That's pretty intense, right? I mean, like that's a lot, to say is a fact. It's not my opinion or anything like that. It's a fact. It did break the trend 3 times and then respond negatively twice. And essentially, what that looks like is, let's take a look here. This was at the point that it hit here and the point that it hit here. The trend formed. This was the first attempted break. This was the second attempted break. This was the third attempted break. And then this was a negative response. And then this was a negative response. Now, it is the case that the red and yellow line will have to break in order to get us to the green. It is physically impossible for us to make it to that level having not broken the red yellow.
Well, we were on that shoulder there, John, and I asked you uh, the direction. Thanks for that, because that's what I was thinking too.
Yeah, man.
Just needed confirmation.
Yeah.
I mean, it knocked me out of my other position here. I had one of my accounts, the other one going up, but anyway,
Hmm.
I was back in anyway. So
Yeah, yeah. And it's honestly it could be viewed as the retest of a triangle. Like I think that this is the actual triangle that it's trying to end.
yeah, I'm sensing that too. Yeah,
Hmm. And we can see that it's like it has a lot of respect for the original trend. Like the original trend that was treated like absolute crap, ironically. It's like, "Oh yeah, now all of a sudden we know you're here." And it's completely at a different level. Like this and I mean it might not seem that obvious, but this level up here, it it's treated differently than down here. One could say that it's easier for this line to break from a lower point. The more energy that it's exerted going down, the easier it will be to just break this on a simple counter trend snapback or something that it needs to pull back to. And I mean, we're kind of on top of it right now, which is another step towards the green dashed line, which like this pattern right here, it's like it made an M.
sure did. Yeah. Yeah, I'll tell you, those fibs are nice to have and stuff like that, but
Hmm?
those lines are like gold, really.
Oh yeah.
Yeah, I got to watch those more often. But sometimes, when you're thinking about getting a train, you're watching basically three screens at once and like three, four, five confluences, right? So,
Yep.
you know,
I find it really intriguing that this area that today there's nothing about the green zone and red zone from today's movement that makes it clear that that's supposed to be a reversal area, like other than the 61. um but the 61, it's not like it was treated too well, because I mean at the end of the day the 61 brought it back to the POC, but then it came back for the people that caught that move, and I'm like, well, not very nice. It could have just done a 61, but no, it had to come back and get them. And you can count on the fact that there will be that much less people trying the second test than the first. That means that, if all the people were buying in there and they had their profit taking orders and their sell orders, that means that now this area is likely to have that much less profit taking orders or sell orders because we've flushed out these people. Um, and we're close to the change of the hour right now, so that could increase volatility as well. And I want to point out another thing. Back in the day, two highs into three lows. This is a reason for a head and shoulders to fail. Two highs into three lows. You can see one, two, and three, and then you have one and two. Like, let me just find this out real quick. Basically, let's see what I say about it here. Here's a pattern that I've discovered long ago. Two highs into three lows. We can see this structure of the day. And some examples that I've used in the past, pictures to show how the same expectations played out. This is one way how a Head and Shoulders can fail. And effectively, we can see that it has those 2 highs into 3 lows. We can have that here as well. So yeah, 2 highs into 3 lows. And then we have it here in the smaller one, another perspective. 2 highs into 3 lows. 2 highs. Yeah, yeah. And the thing is it gets through the right shoulder. And like these are patterns you won't find on Google 100%. I found them myself, so. And I show live examples of exactly when they're happening in other environments. And you can look up those posts and actually find them in
It
the
needs
chat.
like it doesn't have enough energy to go up right away, so it needs these retracements for a certain amount of time to. Like when I was going sideways there on that inverse, and it didn't have enough, energy to get through the line there, so it just basically retraces and comes back down, gathers up energy, and then whips up.
Mhm.
Like it needs to come down in order to get enough energy to go up.
Yeah, exactly.
Now, the 1 minute has just gotten on top of the 15, so it's a little interesting on the RSI.
Yeah, yeah, we were looking at that before, yeah. Oh, it did have a negative response though. Now it's getting on top of it.
Yeah, yeah.
See, retest of the red yellow line is the current action. Remember, we had this the case. Had this become the case earlier, and I find it intriguing that the new adjusted line, the line that many people will put on there, it just fell right through it. And it's like the people that were around for the original line and that kept it there, they're still technically waiting for that retest. Because it's best that we do retest the trends that we break so we don't have to later. Right now, the red zone is being used as that same support that it's been used for many times over. I am interested in putting these spikes on the top of the node. It gives me deja vu of yesterday. I want to see it through the top of that node, to be honest. Like, what is this movement right here? And like, the way that we ended that triangle. And do we see that here at all? With the two, it's so close. These movements right here, low, lower, low, very, very similar to what we had going on there, coming from a major spike, which we did. The process of triangulation is also very clear, having made the spike out of the bottom. But do you remember when I was saying, hey, when we break this low, this becomes a target? That totally played out really well. Basically, when we were in here, I was talking about we could get back to that low, crushed it. I scroll out here, you can see that this volume node is actually quite large at that blue line. See, all of that volume is in there. And we've literally come up to hit that point, and here we are at that very level. Pardon?
How many days do you leave those blue lines in there for? Just until we're completely out of the range, or what?
Yep.
Okay.
Yeah, I'm interested in that one again, the top one.
hmm You mean getting on top of it, or as resistance?
It depends on how we get to it, but I would like to get on top of it. If it takes too long, that could be more difficult. The sooner the better. Sooner we go for it, the more likelier that we have to that we'll break it. Because the longer it takes to get out of this consolidation, the more it has to move to be able to break it as well. Tip of the smaller triangle coming to an end. The brink of a breakout potentially. There it is. The breakout.
Resistance at the PMC.
Yeah, the red line.
A gap to that volume node.
Mm-hmm. Yeah, it's allowed to retest the triangle as well, so.
And slowly filling it.
Yeah. I don't think it's gonna fill it all the way, but it'll definitely cross it, like but it won't fill it in or nothing. It can try. Maybe tomorrow or something it'll fill it in. Like sometimes I've noticed that, like crossing the gap is one thing, but like actually putting enough volume in there, we'd have to spend probably the whole triangle in there to fill it up. Probably more than that. And I don't think it wants to do that right now, but that's okay. I think the slow could lead to fast. Beware of it getting on top of the blue. Like I said, reproducing the spikes out of the top of the range, just like we did yesterday, but in a different way, ever so. There it is. Trying to manage the high of the node.
Resistance on the blue line,
Hmm?
or get on top of the blue line and step on it.
Ultimately, yeah.
Okay.
I'd like to see it attack the red yellow on top. We typically go for the failure of the right shoulder and the head and shoulders on the original head and shoulders here. We go for this to fail altogether. Like these are the people that are in trouble. The bears from the entire beginning half of the day that were positioned for this sell-off that ultimately was bought back up once, twice already now.
that I have from the bottom there.
Yeah, that's fine. It's allowed to retest the triangle, but ultimately the entire move should be taken back. We're trying to get on top of that POC by the end of it all. Basically the test of the tip of the triangle. Left a couple short-term B points up there and a trend that I'm interested in. There you go.
It's basically in the separation of the volume nodes, red to yellow for me.
Yep. Basically cleaned everyone out of the triangle. New line is most attractive out of the bunch. Here we are breaking it.
we're in the exact same scenario where we're just in the shoulder aspect of it all.
Yep, the inverse though.
Yeah, and then just come down on it again or what?
No, I think it goes up.
Okay, I'm good with that.
Playing games with people first though, that's fine.
Still a little triangle right now, actually. I just moved the trend line down to the bottom of this.
Yeah, that one can be moved for sure. It's not a very high probability place to trade, but effectively just monitoring it as we finish these triangles. As soon as we leave the triangle, we come back to it most likely. So it could be a fake out here. As I said, making it difficult. See how it was like a fake out? Basically a fake out. because it's because it's bad for more people than it's good for. Because a lot of people let it happen to them, and then they get wiped out on the fake outs, and you start to see the necessity for these movements after having. Of course, this is like the last minute of the triangle.
Still having issues getting through that trend line though.
POC.
Good point. Yep, I missed that one. Okay.
Everything's just coming back to the POC. It's about to be finished with it, I think, though.
Bullish conversions 2 on the 15-second.
Mm-hmm.
The RSI.
Yeah, it's playing hard to get. It doesn't want anyone in.
You could also say it's forming a shoulder or two head and shoulders.
Yeah, I can kind of see the 2 highs and the 3 lows in the short term.
Yep.
It's
Okay.
it's like a smaller version of this big
Mm-hmm.
sequence here,
Yep.
but except it's like a little bit different. You got 2 highs, and then you got these 3 lows in here. Same kind of deal as what we had with these 2 highs, and then we got the 3 lows in here.
Yes.
Have that in here.
Yep. Yep.
Yep. And the big version, little version. You can see the little version's playing out to roughly 61% of the entire move, knocking out the shoulders. And that's what this one's going to do soon enough. We can see that with this triangle, we've made it even out of both sides. Very common.
Hey, I gotta take off, guys, but you guys have a good one.
Yeah, you too, man.
Yeah, sounds good, Hanky. Take care.
Yeah, take it easy. We're retesting the yellow line. That is the current case. Let's see what they got. Usually too slow for a lot of people. The consolidation invites capitulation. It's a saying I invented. And I believe that it's another thing that makes people say that they can't take this anymore. Like, it's moving too hard against me. I can't take this anymore. I'm out. It's moving too sideways. I'm out. All these excuses. I hear them a million times. And that is another reason for somebody to quit. And because somebody quit, that means that their sell order to take profit is not here anymore. And if we can get 1,000 people to quit, then maybe only a small order can get us up here. And it's not the people that drive the market, it's the institutions. Or else more people would have more impact for longer. But what's funny is the people battle each other. It's not like they're all on the team. It's like the individuals are like a death match, and there's a team of people shooting everyone as well. Like in a perspective, it's like imagine how unfair that would be. Like in Halo, if you had one team and then everybody else by themselves, and the team was allowed to be on the same team, and everybody else is by themselves. But you have an option to be on a team. Instead, everybody chooses to be an individual. Everybody chooses to make it their own strategy, their own path. Everyone has to become their own genius to be able to beat the market. Is the way that they make it seem as an individual, as they laugh from their from the Wall Streets of the world. It's very interesting to me.
Like 6 minutes away from the top of the hour, maybe we'll jump at that particular point too.
Mm-hmm. Yeah, it's just good to make sure all stops are placed at a safe spot, and patience is here.
little head and shoulders there, but looks like it's gonna fail. It's pushing up higher.
Yeah, it's almost like it's created the same kind of triangle that it did originally here.
Uh-huh. Yeah. Yeah, I'm on that one.
Anything we do outside of this triangle is subject to coming back to it as well. Initially.
If it does what it did before, with a spike down and then going up again.
Yeah, that's fine. It would be a spike out of the top and bottom, create a downtrend,
Yep.
and it would just instantly break it, I think. So if a downtrend forms because a spike happens out of the bottom, it could instantly turn around and break the downtrend. I admire how much it's using the red zone as a support. The POC was made in an area that really wasn't neutral yesterday. It was made on top of a range, which is kind of interesting because we put all the volume not inside of the range but outside of it. And that's funny to me because the amount of volume that we put in there is the size of the range itself. It's just moved it up. This line comes the new line that I'm attracted to, sorry, to break. This is the same kind of move that we had a minute ago, except the break of the yellow line should be a lot stronger. First step in breaking a line is getting to it. And there it is, just like last time, except this time the yellow line is different. This time we go here. And turn that green dash line into a support. It doesn't end there. I think it's foolish to sell at the green dash
What was
line.
the confluence there, John? Just the red zone and doubling up on the range, or
Well, I can see that they're trying to thread the needle. It's the small short-term movements that are trying to get the last few people out of the way before the institutions make their move. I can just see it's that environment right now. It's definitely trying to weed people out.
Yeah, back to the POC and then potentially higher here.
Hmm.
Some people would be surprised that the 1 minute RSI never came right down to the bottom though, and it never came off a major fib or anything like that. So, it really stopped doing what it was doing before, where it went sideways like an inverse and then it came down, got a new low.
Yeah.
This one didn't produce any low.
No, no.
And, if you didn't catch the low, say the lower part, and tried to catch it in any one of these freaking particular areas, it was very difficult. You know,
Yeah. Oh, yeah. That's how it's supposed to be, though.
yeah, but
That's how we
you
wanted it
just
to be,
couldn't.
really. I mean, it's supposed to
Yeah,
be
of
like
course,
that.
but you couldn't trade like just thinking, oh, okay, the separation between the red and the yellow zone. Well, let's just take a trade there. It's like you would have got friggin', what would you
Minimal.
got? 20-point stops there. Yeah,
Yeah.
but you know what I mean? Like really, really difficult there. So find it interesting.
Yeah. And then you think, is the play to be battling it, or are they already in, having everyone else fight this, and watching them go through just
Well,
hell?
even if you weren't in it, right? But even if you weren't in at the very beginning of the day or whatever, just those two lows there, much better entries than dicking around in the middle.
It's true. It's true. Yeah.
Even when it came to the separation of the red and the yellow zone. So it's like you had your opportunity before, you never took it. Now you're trying to battle this shit. Like, what are you doing?
Yeah. Exactly. Right. It's
Yeah,
exactly.
it's stupid.
It doesn't make any sense. Yep.
No, it's crazy.
And it doesn't matter that this is like a large portion of the day. If it, like, it's just that's normal. Like 80% of the day, is an area where if you trade at it, it's likely to overlap you. Now look at this, beautifully right to the target, exactly how I put it in. And I say it was supposed to turn it into a support eventually too. This is calculated to a T. And a lot of people don't get to wait around to be able to find these actual precision calculations like that, because it's just too much for them and they can't take it. Like they've never lived from 9:30 to 4 before, or worked from 9:30 to 4 before. But because you have the option to make today into a weekend, you take it. And I'm like, ay, 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 ay. No, 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 no. If I could trade the weekends, I would. But no. At the end of the day, it's good to have a break. But while it is open, I mean, it's only 9:30 to 4 that they know that they're going to be dealing with the American public, and after hours, you can see it moves completely different. And all of the major hedges that I can see that have been made over the past couple of years have happened at like 4:30 in the morning at the high, and then it starts the day already down. So people try and buy it, it just doesn't go up. Just keeps falling down, and I'm like, who got the best price? Who was there at 4:30 in the morning? Because it wasn't the American public that decided it was going to come down. That's all-time high.
It's cheap probably at that time, but definitely not me.
Sorry, what's that?
I certainly wasn't trading at 4:30 in the morning.
Yeah, yeah.
I just find there's just so many opportunities to trade within the hours or just before it opens or whatever that yeah, I don't have to get up that early.
Oh, exactly, exactly. You
Yeah.
know, it's days like if we're at all-time highs, it's a different story. Like if it's a matter of, oh, we're at like 3-year lows, I'm up all night until I'm in. 100%. Like if it means that I have to be up all night for like 2 weeks to be in for 2 years, it's like, oh yeah, totally worth it. Yeah, because it's like every single low since the point that you catch it, you don't have to take a risk trying to buy here and maybe getting stopped out. You don't have to take a risk getting here, maybe getting stopped out, or any one of these lows, because you're already in for every single one of the gains that there's ever going to be to the upside again. And all we have to do is find on MNQ exactly where it's going to come down, where it's going to come down, where it's going to come down. Life's so much easier. And then once you have your trade on MNQ and it's locked in and you're profitable, you open up a separate account and day trade on that one. and then keep your long-term exposure for the long term. You got your short-term move captured within your hedge, and until the hedge gets knocked out and the core advances again, maintain and continue trading on a short-term account if need be. So here we are making it through the green dash line, turning it into a support. We're going to test it from above. I'll make it a thick green line now because it's not a target anymore. It's literally something we can step on, something we can use as a platform, something we can recognize. And you want to know what's funny is it's not the people that will recognize this because it's not a trend line. It's never come from anywhere. Who's got that trend line? And why would it even care about it? But the few that have all the control recognize it, or else it wouldn't be used. And I don't even think it's being used by 100 individuals, so they don't even stand a chance at it being them. They're just completely not involved. Most people have quit. But I'm not comfortable just, coming in and snatching a quick profit and then like losing my relationship with the market. Like I literally like to know every move, every way that it consolidates, every way that it trends, every pattern that it forms, every single fluctuation that it makes, the way that the candlestick gyrates from the highs to the lows and how fast it moves while it does it. I remember all of it. And I believe it's necessary to having a good relationship, having an understanding. 'Cause either you can accept it or neglect it. And I mean, like, why neglect the information? If you can retain it, if you can comprehend it, then it's a disadvantage not to. It's like some people, they say too many lines. I'm like, well, I dare you to try to do it without them. It's like, what are the results going to be? I'm like, what is it? Like, you're going to start, it's like you have a map and a journey, and it's like, start taking things off the map, thinking it's going to be simpler and easier to follow. It doesn't make any sense. But understanding what obstacles are in the way throughout the journey is incredibly important. Like, you could look at it like a journey that you're trying to go on that has obstacles. You could look at it like there's an object that is flowing down a river and it's bouncing off of the rocks that are in the river. And effectively, the name of the game is to navigate the river. Understand the rocks well, understand the barriers well, understand everything that could run into it and affect its ability to continue its trajectory. But this was the line that changed everything. And this was the line that turned it into a target. And then we got on top of it, and every single thing that it did, from the slowness that it had, from the spike out of the bottom that was replicated from the top, every single thing was mentioned. We talk about this spike right here happened out of the first triangle. Same spike happened out of the bottom of the second triangle. Separated by two. A consolidation. Pattern you won't find on Google because I invented it.
Yeah, you gave me confidence to hold there, John. Appreciate it, man.
Yeah, man. You want to know what's funny with this though too? You know how it did the three highs into three lows, and it was absolutely crap off of it. Like it was like, okay, sure, catch the third low. You're gonna be right the whole time, but we're gonna put you through it. And I mean here, it kind of did the same thing, but it kind of put them up to a little bit more. It was like, right, the people that went through this one, they're not going to be as safe as the people that actually caught the best price. The people that actually caught the best price weren't threatened at all, but the people that caught the same trade again but gave up the first one were threatened with a new low. And then it moved because it was like that was the point where it got most of the people out and it was clear skies with no obstruction because we wiped everybody out of the consolidation and then moved up to all of their targets without them. And that's exactly what we need to do from now on out, is understand this is a process that I believe is the expectations of some and the deliberate fall of the individuals, and they were literally herded together, the people of the node. And look at this spike now. Isn't it funny that this right here, separated by this and this, is actually happening now here? And what did I say about putting the spike out of the top of the range? These spikes were destined to happen out of the top of the range for how long? How long has it been the idea? We've done that now. Completed. It's a good point to consider taking some off as well. But not quite hedging. But that's the idea. Consolidation invites capitulation. It's another thing that you can find people can make excuses for. Like, I can't take this anymore. The movement is crappy. It's not good enough for me. They act like it's never going to move again. You know that every good move has come from shitty movement. And if you ever expect to be at the beginning of a good move, well, do you not have to be analyzing when it's not moving already, or are you going to get in a halfway up the move? I mean, like, what's the logic in it? What is good for you if it's not good for you when it's slow? Well, how do you anticipate when it's going to go fast? How do you say, hey, the next time that we do break that yellow line, we break it with force? We don't fall off of it, we break it properly. And that's what it did. Because it was supposed to do that, not because it was my opinion, but because it was my expectation. Just remember that. And
So
it's.
here's a little thought
Mhm,
experiment. Now, I haven't traded like in day trading ever
mhm.
really, so I'm here to learn. But I have a thought that if you get played and you end up buying in the middle, do people end up like putting more in to try and catch that rise or catch that feeling, or I don't know why you would do that, but it seems like something people would do.
Yeah, 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 exactly. So people do that because they get into a relationship with their profit and loss where they get to they see it do well and they don't know what they've done to make money, but they feel good about it and then they long for that. And they know that the more that they have, there's a higher chance that they will be able to get to that feeling quicker because it'll be moving harder. But yet they don't know what it feels like when it goes bad and then it goes bad for them. Now they feel a completely different way and it starts to affect their ability to trade anything anymore because they start to become skeptical because they don't like the pain that it's brought them when they've traded on
Ah,
something that means nothing. And I'm like, I can see it's like an emotional roller coaster where you know it's like it does remind me of what it was like when I went to school and I tried to do math tests that I had no idea or I didn't study for them or I just didn't care about what it was and I was like, oh crap, comes down to like SATs or something in England. I don't know what the hell's going on. I just assume it's like a complete failure because I didn't pay attention. I was like this. I didn't find any value in what they were teaching, so it was really hard for me to pass their tests and. That's what it was about. I recognized towards the end of my schooling that schooling is about how to pass tests well. It's not about actually retaining and learning information because you get
oh
tested
boy,
on it
yeah, I'll
once.
tell you that firsthand as a teacher. It's about passing that test.
Exactly, which is absolutely crazy. As a teacher, do you think that what why how on earth are you guys supposed to learn? Like okay, my test is right here in front of you. The market tests everybody every day. When I teach people, they go out there and they either get slaughtered or they make a bunch of money because of what I've taught them. So it's like I have to be very careful, and it's like that's the interesting part about what's going on here. It's like you have to make sure that you're very, very, very in line with exactly what I'm teaching, or else you're doing something else, undeniably, right? So,
Right.
like that's the
It's interesting.
that's the funny part.
Like in statistics, I teach for the test because there's 12 points of information that the school wants to make sure every student has by the end of the school year. And so I make sure to hit those 12. I've got four extra for any side lessons or whatever. And I try and relate it to real world stuff, but really they're working for the test. Now the other class I would teach, which was psychology of sustainability, and that's organizational sustainability, not like uh, environmentalism. But that was more like I taught people why we were learning stuff and not what to learn. And so I think that just different feelings as far as that class goes. But yeah, it's way better to teach people why they're learning it than just hey, 1 + 1 is 2 or whatever.
Yeah, exactly. Because when I talk about something, it's like, okay, this is the information that I have for this environment, and this is how it's going to apply to a practical use in this situation. And this is how it's related to other situations that have also been like this. And I mean, like that, I'm like how could I do it better than to do it that way? I'm like that's like I don't know. I'm trying to figure out what I can do to make it even clearer for people, but at the end of the day, I can't make it move sooner than I want it to, and it's hard for me when I know it's hard for people to wait through this, and I'm like, well, you know, that's what it takes to get this. And if you ain't got this, if you can't sit through this, I mean, you'll never get that. You know what I mean? And that's what the market's just said. And I'm like, well, I know what this is worth waiting for. I know this is worth waiting for. You know what I mean? Usually it's more, and it's not even finished yet. But at the end of the day, I mean, it is throughout the time that we have, it's the movements the market has chosen to make. We can either be with them or against them. I'm completely convicted that there is or convinced that there is like a one way the market is supposed to move, and it is the way it's moving at all given times, and it's us that are out of line with it if we don't see it the way that it should be moving. That's the way that I think, and that's like that means that it is math, and it's math that changes though as well. It's like you know, it's like like engineers must use different types of math all the time to figure out different problems that happen to the machines that they run or the buildings that they build or different variables that happen. I'm like, geez, how many variables do they have to deal with? Like how many small things can be wrong? And I mean, like, we have to decide whether it goes up, down, or sideways. There's three things that can happen. One of them is going to be happening at all given times, and we can guarantee that. So it's you know it's not as hard to fail, which is funny about that, as it would be for like how many years would it take me from scratch to be able to figure out how to construct a car? I mean, like it would take so much more time, so much more dedication. And I'm like, people don't even realize what they do the whole time that they're learning. And I mean, like you could put that dedication into something that at the end of the day has higher remuneration and it is somewhat healthier and easier at the same time. At the same time, you don't have to expose yourself to any physical danger of any kind. That's good. But it's just like it's interesting that there can be less variables, there can be less like physical risk, and uh, and less concepts are required to be understood. Like I don't think that anybody can become an engineer by just understanding 30 concepts. 30 concepts is this might seem like a lot to somebody getting into something new, but like how many concepts does a doctor need to understand? Like 30? What about 3,000 probably? Probably more, like 30. Like I don't know. I'm not a doctor, but I know that they have to go to school for 10 years. And how many concepts do we learn every day when we go to school? I mean, like you must learn at least like 3, or something like that. You would think, or I don't
There's
know.
a interesting study in memory and cognition is the field of study. And the idea is, and we'll use chess. Chess always gets used as the example. So a beginner steps into chess and they see however many pieces, and each piece has its own move. A
Hmm.
professional or a mediocre chess player now sees it as available moves, and they're seeing a few steps ahead. A master chess player, uh, they they can't even relate to what the beginner chess player is thinking because they don't think about it as individual pieces anymore. It's this whole organism of the game, and so it's interesting the way that our minds change as we learn, and so those individual chunks of information turn into groups of information that are really just feel like one thing to us, but we forgot how we learned it sometimes.
That's really interesting. And it makes you think after you've done the process and you get involved with something new where it really counts that you do it right, like maybe you've only got so many materials, maybe you've only got one shot or something, but you have the option to prepare for it. And people take their shots without understanding, that they're at that beginning level and that they have to learn to become able to see the whole picture in order to do it properly because it can't be done unless you're at that master level. Not because anything that you do is deemed to be taken back by somebody that's at the master level if you continue until you're there yourself. That's
Absolutely, a beginner might get a couple of good moves on a master by lucking into it, but they'll never win the game.
Exactly. So I mean, the key is to make sure that you continue to learn, to make sure that you don't get ahead of yourself, and make sure that you're always learning, and until you can see everything differently. Like you might like, because I can relate to being able to, everybody gets this tunnel vision as soon as they start. They're like, oh my god, this one thing, I'm going to be able to repeat it over and over again. Everyone's like started to calculate compounding interest of how rich they're going to be and everything. I'm like, everybody does this. I'm like, what, why are we so like that? Bothers me.
Yeah, I think that's a very human thing,
Hmm.
and the effect's been studied. A lot of
Not
people
that I
call it
didn't
the
do it.
Dunning-Kruger effect, but then there's like the Gerson effect and these other things where it's just the way that we build our confidence first before we build our knowledge, and that can be dangerous.
That's
And we become
really
overconfident.
interesting. That's really interesting. It is true. I
And so
totally agree.
you'll get people telling you they know everything about a subject, especially coding was my Dunning-Kruger. So I
Hmm?
like blah blah blah. I know all this SQL. Well, people that really knew SQL were just sort of letting me talk, and so it's like I didn't know until I had the experience that I was kind of full of it, even though I thought I had it figured out.
Interesting. Yeah. Hmm. Yeah, and what's interesting about that as well is it's like something that you have to stay on top of. Like it doesn't matter how good of a coder you were 10 years ago if you're the top of the line, it's pretty much useless now, isn't it? Like I mean, you need you need to keep on the curve. You need to keep up with it. You need to stay on it. You need to continue your relationship with that math, with that code, with that whole process. And I think that that's really important
Yeah.
to being able to see that bigger picture um, aspect.
Well, that's part of the reason I'm in here every day and I talk. I know everybody said it's okay that I talk and I appreciate that, but I can't learn without speaking.
Oh yeah, I
That's
encourage
why
everybody to talk. I really think,
you
if
do, and
anybody
it's
has a
really
question.
nice. Everybody on this channel is super cool about it. So yeah.
Yeah. So we did just hit a B point here, and we did make basically what is like a W into an M. So we have to watch out for the new trend that I just put in there. It's not an immediate threat, of course, but the B point that is in there is now basically in play, and we do have to watch out for like the 61 of this move here. Yeah, we're basically hitting that 61 right there, which has been a really common level. I mean, if we end up holding that 61 and it's the cause of the downtrend break, that could propel us quite far. Like I'm not opposed to something like that in the future, which I know it's kind of rough right now, but at the end of the day, that could happen. And as strange as it may as unlikely as it may seem, the move would be to basically double this to the upside, and it's kind of out there right now. Basically, the value of actually breaking this short-term yellow line would be to get to this green one, which I'm very intrigued by. Now, funny enough, that green line could have a serious negative impact in conjunction with the VWAP up there. And it's not going to get there really quickly either. It's going to take time, and we basically can, it wouldn't be abnormal if we could chop to the downtrend break and then get through it like that. But this level right here is something of an interest to me. I think we're trying to slowly kind of build on the retracements like that. I get a lot of that here, eh? So it's been very common at the lows for us to do stuff like that. Even today they did it in a really kind of cheeky way where it was like, okay, here's the first consolidation. We're not coming all the way back, but they came all the way back. It's like, don't think they weren't thinking about it. They literally did it again here and then did it here. It's very, very, very rough on the people that were literally trying to get the trade that was right. Remember that. And just think about this area and what it did here. Do we notice that? Is that the same thing? Like the same thing to me. So, I mean, a relevant pattern, you could say. something that happens as regularly as that to be looked for. When major changes come to an end, we could say that could be one of the things that could actually that could actually be up next for change. Now, I'm just going to point out again, this level where we are right now, the POC, that has been the level that we have returned to the most today. And every single level that we have ever done to it has come back to it as swiftly as it's left it. And we have seen no level for any more volume than the level that we're at right now. It's got the most volume. This is the level. More people have traded at this level than any other level. And like we totally just made this spike here separated by this, and I would call this, basically this is one way of how we've managed to make a giant S wave and meet the equilibrium, centralization point, middle. We also have to watch out for the next move to merely be the size of the last counter trend move. And it may decide to make an entirely new low after making this gyration. So basically what this will do is the people that are so eager at catching the reversal will only get this, and then they will think twice at trying again. The second time will actually move more. That is a likely scenario. If we make this move back to the high of the range, could be on the table, but I do believe it's a very, very risky environment to make a decision. Clearly they had to come back for some chasers. Because you know what's funny? The institutions cannot tell who's willing to trade. They can tell every order and all the clumps of orders that people are putting in. As soon as they buy, they have a stop and a profit. They can see all of that displayed right in front of them with absolute accuracy from every single broker. And the on every single exchange too. And they can't tell if people are willing to make a trade though. They can't tell if they're all sitting at the computer waiting for there to be a move outside of the range so they can all pile in at the same time. So it has to do things that deter people from being around so they can't be in the way. And what the people are good for is liquidity. When we get rid of them, we make a move. And then when we want to sell, we get them back. We get them in the node. And where do we piece off our position? Well, if the big players piece off in these giant nodes that the people make, that's how they get their liquidity off of the public. How else do they do it? There's so many other losing hedge funds out there that provide liquidity to the best hedge funds. I'm like, I just can't believe that. Not for 2 seconds. But when I look at the strategies of the public, oh yeah, I totally believe that they're the seals for the sharks, right? Okay. The last move that we did counter as a counter trend move, this size, move that we just did right here, what size? Same size as the last counter trend move. And it doesn't even really look like it made that move, but undeniably as a mathematical fact, it did make exactly that distance. Undeniably. That is what the market chose to do after I mentioned it should. Does it matter that that's a negligible, tiny move? No, but the fact that the market wanted to show us, and it confirms my alignment with its ability to move at all times. And like, yeah, sure, I'm not interested in taking little tiny little moves like that, but it's good to make sure that it's understood. It's either accepted or neglected, like I say. And I accept it. And the market chooses to accept what I have to say, and it does what I have to say in turn. And that's priceless. Worth more than any kind of money you can make today, or anybody can make today. Because what's the ability to make, it's the question. It's like, would you rather have the ability to make $50,000 a week or $50,000 now? At the end of the day, it's quite clear. But everybody trades like they just want the $50,000 now. They don't trade like they're making moves that are going to be based off of reliable strategies that change with the environment week to week, that are in line with the market's movements and exactly, you know, at the moment that it should be considered, from the end of the consolidation, exactly at the moment for the trend that it should break to get to the exact destination that it should get to, and an exact management strategy to retain safety and profitability throughout the entire journey. And I say, as low of an emotional roller coaster ride as possible. And that's the only way we do that is clarity, and the only thing we should ever act on. Clarity brings consistency, and without consistency, um, everything is pointless. It all comes down to consistency. Because if you can't be consistent, well, what does that mean for you? It means that whatever you have done will be taken back by somebody that is consistent. And that's just that's interesting how many people believe that it is impossible to be consistent. And it's like, what's funny is they just choose to act on things that make them inconsistent. You can choose that sometimes when a sideways range comes in like what it did just there, that it's not good for you. And let's say that's your only hour off of work that week. Well, if it's not good for you and you have no time to trade it, well, you shouldn't trade that hour. It doesn't matter that you don't have time. If it's not the right time to trade, well, you shouldn't be trading it. And you make that decision because it's a mature decision and the right decision. Because what's the price of losing money? Like, you don't want to lose the money because there's no point. If you knew it wasn't a good spot to trade, well, you shouldn't be trading it, right? And that's just like, if you had a coach, like when I played hockey and stuff like that, they would tell me that. They'd be like, "Well, I told you that this is exactly what you should be doing, and you went off and did your own thing when you expect the results to be differently." And I'm like, with a math teacher, they would be like, "What do you mean you expect the results to be different? There's one way to do the math, and it's this way. And don't make your own way, or you're going to be wrong." Nobody tries to figure out how to do addition. They're taught how to do addition. Everybody tries to figure out how to trade. And I'm like, well, I don't understand why. When it's so clear. And everybody tries to find their own genius with it, I think. And it's like everybody wants to be like somebody that can calculate every single move, and they don't try to be that. They just want to be, and that's the interesting part. Like, you got to respect the hard work. If you've ever done anything before that's, really, really worth doing, that's really hard to do, that took you a long time, you know the value in taking the time to do it right, because it's worth it. Because you know what it's like to not
Right.
do it right. How many times did you fail in the process of doing it? Like, you might be building a chair and it's like, oh, not right. Got to start again, start again, start again. And then you do it right. And it took all that time, but now you've got what you want. And now the time was worth it. But until you have what you want, really, the time isn't it's not justified spending it yet until you've finished, until you've put it in, until you've gotten what you set out for. And it's like, some people can choose to be like that. Other people, they can choose to they say, oh, I've been placed in this environment, and this is how the environment has treated me, and it's so unfortunate. And basically that's like making yourself into like a victim that seems like you have no control over the environment. Or it's like, oh, all of the people that went down with this big dump in 2007 or whatever, it like or 2008, it basically like, it's like, and then everybody finds that it's okay to have lost that money because everybody else is losing the money. And it's like all the mutual fund managers are like, yeah, everybody's going through this, I'm going through this, and we all just going through this. It's just everybody's getting wiped out in one big swift wipe. And I'm like, well, and everybody's completely helpless. And all of the people that were supposed to have helped them didn't help anybody. And I'm like, well, that's kind of interesting. We continue to use them. But, humans. We do
Right.
strange things.
It was funny when I was first teaching my daughter how to do addition, subtraction. She definitely tried to figure out her own way to do it, and she was trying to do like uh, subtraction things in her addition, and I was like, no, no, you can't do it. I know you're very creative, but now's not the time for creativity. Let's learn the basics, and then we can be creative. And she got it.
Yeah. Yeah, because it's interesting. Everybody learns math with the one definitive way as well, but then you look at the real like mathematicians and their chalkboards of insanity. Tell me they don't have any kind of creativity? Of course they do.
Yeah, exactly. And it's that comes with understanding the basics, and that's that memory and cognition thing that I was talking about. You've got to see the board for what it is, and not as like a novice before you can be creative. So I'm never going to come up with a chess play, but a master will. Because there's
Mm.
billions of them.
Yeah, yeah, exactly.
I might get lucky, and that's about all I can help for. So that's why I'm spending a year learning this stuff.
Mhm,
I'm
mhm.
not gonna stop trying to take my year because I'm not in a hurry to do
Exactly.
wrong.
And you reanalyze in a year, and it's like if you're at the point where you're saying like I cannot believe that I'm seeing so many things so clearly and I'm not doing anything about it and it's bothering you, then you're ready.
Yeah, yeah, there it is, right?
Yeah. Like if it's like now it gets to the point where it's like literally you've said that it's going to do 10 things in a row and it's to the point where it's like you can see the results, even if you are wrong on the first thing that you do. Like you want to make sure that you're building with low size slowly, and basically that's a way to mitigate the risk of beginning, and because it's interesting because your analysis, it becomes a little bit harder to do when you are met with an emotional battle at the beginning, and that's tends to be the case, but the emotional battles undeniably become easier the more that you fight them, just like a lot of other things. And it's like you get better at finding systems to mitigate your emotions. And I think one way to do that really is to constantly keep um, an active approach to thinking about what the market could be doing, what the market is doing, how you're related to the market, in what position you have, how it's protected, and just running the strategy over that you're doing again, like from the beginning to the end. Okay, this is how I got in. This is why I got in. This is where I want to go. You know, and I do that like subconsciously, like as I'm sitting. But I do explain what I'm thinking as well, and I don't stop thinking. And I think that it's really the market will hit you with a surprise the moment that you stop thinking. I think, and it's like it's good to not have any. You don't want to have surprises. You want to have understanding. That's the idea. Is like I want to come out of the day with more understanding um, about what happened, about what's going to happen, and about what I can do and how I can prepare, how I can seize the opportunities or avoid the dangers. It reminds me of like navigating like a really like difficult jungle or something like that. You really don't know what you're gonna get, but there's people out there that do better than others, because they have retained information on systems that can effectively help them in those environments. We have the ability to learn those and practice those systems to make it so that we're more effective in those environments. Basically, it's the same with this. Same with video games too. Literally, if anybody plays video games, you learn to become better at video games, and the skills that you use to do the tasks you can bring over into other scenarios in life as well. The more difficult they are, and the more of an accomplishment it is to conquer them, and you know it compels you to to seek those accomplishments after having attained them. Because you know what you're doing. You're going after something that's literally uh, definitive, and you want that specific result. And when you're doing that, you're not like just buying and selling randomly like these people on CNBC, hoping that that it's going to do better, and just you don't know what your time horizon is or what's going on. You're waiting for people to give you statistical reports that they've like created and had time to like literally act on themselves and so on, and even they could be incorrect on it, and they're all different kinds of variables. And I'm like, well, like how many stages of other people are you going to have to go through before you get to what you're controlling? Like how much does the individual understand at the end of the day is what I'm trying to say. Like how much do we understand? How much is being controlled by what we're hearing on the news and influencing our decisions, and how much is being influenced by our analysis, the facts of the situation, the technical analysis, and the environmental analysis that we can see in the chart and everything like that is really important. And if we're acting off of those facts, then and those patterns that give us exactly specific targets with specific entries that provide a specific risk reward profile for that situation, we can really see value in being part of it. And if the reward from one trade pays for the multiple failures of others, and you know that you're able to make more like winning trades than losing trades, then you can work with that, and you can hone that to be better and better, to wait for what's good for you, and to find the trade that matters for you, that makes it easy for you, and then focus on that.
I'm down.
Yeah. Like this one right here, we're going to this green dash line right now, and it looks like we're moving through this range, and it's becoming a W that came from an M. This,
Yeah, I've been seeing those all day. Like you were
hmm
saying, it's kind of a day for them.
yeah, yeah,
And now that I know what a B point is, I can understand them a little better.
yeah.
Yeah, it was a foreign concept to me, and I was in the financial industry for 15 years before I started this. So
Oh wow.
yeah, I didn't have a clue what it was.
Yep.
I mean, it's completely different language, completely different candle language and B points and M's, W's, triangles. It's all rather simplistic, but it's a foreign concept to me in the financial world. I was in more into planning rather than, charting like this, but still didn't have a
Yeah.
clue.
Well, it's like they have a system for that, and they teach you the system and expect you to do it the way you're supposed to do it, and it's hard to do it, but you did it and you're successful at it, and it's like that was, you know, that's like a completely different industry or organization altogether.
Yeah, it is. Like my financial planner, I talked to him about some of this stuff, and yeah, he's got his plan, but it doesn't look anything like what we're doing here. So it's interesting.
Hmm. So we've just knocked out this one here. We're done with that V point.
Yeah. But yeah, like I always say, it's I'm trying to learn how to take control of it myself. So I mean, Pete's a nice guy and all, but I want to learn how to do it myself.
Oh, 100%. 100%.
That's the thing, planners plan. They don't do this. They haven't got a clue what's going on here.
Well, somebody creates the investment vehicles that they're allowed to sell too, and they don't even communicate with those people. So
No,
it's like there's minimal information on them too. Like you get like Morningstar or something like that. You can look on
they
there, and
just
there's like
invest.
a
They just invest according
paragraph.
to your risk tolerance. That's all. They don't get into the details of the investment.
True, true, true. Yeah, sometimes if you're lucky, they'll have like a paragraph about it, but I guess not even. If you research the mutual fund or something like that, or they have like, because I know in the states they're a little bit more flexible about it. Because I remember there was a guy that he could switch it into gold and stuff like that, and I just feel like that wasn't available when I looked in Canada and stuff like that. It was very.
Oh yeah, I could get like crypto and gold and all that stuff, but I'm not big into
Oh
commodities.
yeah, no, no,
Uh,
no.
like,
Just as a hypothetical situation, I just thought the options it's nice to have them.
yeah, yeah, it is.
And just with golden as an example, there's probably more, like way more. It's like I don't know why it's the business of restricting people and information. That's how you make money off of them
Yeah,
is.
restricting information's yeah. I mean, there's laws about restricting information. I mean, what if everybody was on the equal playing ground? Forget about it.
Yeah, yeah. It's interesting. Interesting. And it's like it's what's funny is like I know that if I explain exactly what to do every single day, people can't do it unless they have patience and discipline. Discipline to follow the rules and the patience to wait for what I have to say. That is interesting to me. And that's the interesting part, because the more that people succeed, the more that inclined they are to trade more often, and the more flexible they become with being able to experiment, and it always is like it's like incredibly dangerous, but it's very human to be like that. And the hard way is to have it fail and fail and fail, and know that there's the one way to do it. And you see that way, but instead you're experimenting, and you're doing something else, and it's like, well, then you lose money, and it starts to become this like terrible experience rather than you know like if you, that's the hard way of learning that the rules are meant to be followed. And it's like at the end of the day it can be like that. It's like that for most, and like definitely, I didn't take the easy way. I wasn't taught at all. The market like had to teach me everything. My experiences taught me everything that I know. And I originally started as a long-term investor and so on, so it was pretty much like I learned everything that everybody was learning from the beginning. With the company's making money and paying higher dividends, we're going to invest the same amount of money every month and continue to grow our exposure to that company. And it's like, holy smokes. It was a process, but and I think it was a fun process, but it took a long time for sure, and it was unnecessary because it was very difficult for me to find anybody that understood what they were doing, and it really pissed me off when I would search things up like the MACD, because you would find that there was like 100 different ways not to use it, and when I would use it and then find that the results were different for me, I was like, what is going on with that? And then I read the name and I was like, nobody talks about the convergences or the divergences. They're all talking about crossovers and stuff. I'm like, what is the crossover? Is it the moving average crossover indicator? Because it's like that's the way people are. They assume it's going to work, and they just say they assume it's going to work. They look back and they see, oh, this is maybe how it works in the past. Then they make a video on it, and that's how people learn. And because the more people flock to that video, now you can expect that people treat it that way. And I'm like, because 100 people have a video, now it's questionable to listen to anybody, because it's like, okay, who is right then? Everybody's confused. It seems like everybody has their own strategy and their own idea of what's going on. Nobody has one definitive way of understanding there's one move that we can be on and targets that the market is supposed to be getting to that it knocks out every single moment, where I forget every single day how many targets I take away, and I'm like, that's every single day. There's not a day where I don't take off B points. Not a day where trends that we can easily find ourselves exposed to can break in and give us exposure to every B point that's literally on the other side of the trend. Like right now, we have to watch out for it to get through the high, because that risks it becoming a B point of its own, to become something like a sorry, like a W, except it'll just look a little funny. Now, not always does it have to work like that. Like there is a pattern that works like this, and it's essentially the same thing, except it doesn't come from a downtrend. But where you would place the fib on the move is the same spot, from here to here. So from here to here, just like the same. So you would get the same fibs and the same reversal to the same point. You don't even use this part. It doesn't even matter. That is a part that is random movement. The X to A is completely random movement. And here, just to draw it out, properly so everyone can see that it's actually a pattern, not making it up. It's A, B, C, D. Now there's 3 versions of this pattern. The AB equals CD, which is what we've done here now. And the AB is equal to the to the CD. It would be there then. That would be correct if it was doing that pattern. And there would be the ABCD extension, which would be the extension tool applied on there, which it can extend to various levels, and I never use that, but it is one of them. And then there's also AB equals CD, ABCD extension, and then there's the one where you apply, this is another really common one, where you apply the B and the C, and we go for levels like the 261 and the 188, where you apply the fibs just as you would to a W. Fibs would be applied the exact same way in the W, and we would go for it to break this trend, this uptrend, down to that B point, which would be here. And I would mark that with a green dash line. Just like we do have one down here. However, I do think that one is a little controversial, and it shouldn't be, I wouldn't be too certain that it's going to get hit in any near future here, because it could squeeze people. I think it's dangerous to try and go for those levels right now. Right now, it's quite interesting. We've made a 95% retracement roughly. The 188-200 would be at the VWAP, and I am intrigued by that level. I do like that level up there. And in the event that we get on top of this level, which I think we will, we'll have to test it from other side. Older levels, so I'm gonna make it darker. This green line I can remove now because it's no longer a target. These levels here are effectively like a symmetrical triangle. Oh, sorry. A symmetrical triangle that broke out, and just take note that it didn't retest properly. Like I mean, unless you consider this the little retest, it never really did a proper predominant retest until it came all the way back to test the tip. And I mean, that's another version of it being able to do this kind of movement. And what I expect it to go into is not this again, but rather a sideways movement that leads to more upwards movement. And that's what I think we're going to end up getting here without the ability to pull back to the sideways movement. So if we get another one of these here, it's not going to have that same kind of pullback, and instead it'll move up. This is my expectation. I'm gonna post this rough schematic basically. This is be like this is rough to the overall experience or um, projection. This is what I think this is going to lead. And these lines here you can put as purple.
look at the 5 minute here too, John, and it keeps running into the 15-minute RSI, making it hard to push it up.
Mhm.
If we just step on top of it.
I think that's what it's gonna do here. Sorry, I was just typing a freaking novel here. Let's see.
Yeah.
And just remember, there has been no attempt on that third low since this happened. And that was when I was explaining this here. Completely different time. That was the last time that we saw that was 8/21/2020. This is a controversial level at the high of the node where basically we're threatening to break the uptrend, but it's not threatening to break in a way that really makes me think it's going to have good, long-lasting benefits for those that are breaking the trend, but rather um, it's just kind of getting the long traders to sell their long trades because they think it's coming down, and soon we should be on top. They're just trying to throw everything they can at people to make sure that they aren't adding to the next barrier, because the more people are involved, the more likely that they add to the barriers that there are to come. It's pretty much like they want to see that clear skies environment that we saw yesterday at the close as well, where everybody was pushed out of the way for the imbalance.
So, is there no volume, or are they up there, or is there just not showing volume? I
Where
don't understand fully. Like, if we go further up, there's like no volume or nodes or anything. Is that because we haven't gotten there, and so people don't trade on that level yet, or I don't know? It's
well,
a dumb question.
no, not at all. So
There's volume up there.
there is volume up there, but it's not showing because this is the visible range volume profile. So as I morph my chart out, like it'll show that there's actually volume down here when it loads in.
Oh,
Because it's visibly on the screen now, but if I take that stuff off the screen, that volume will disappear when it loads. And it's like nothing's there. But that's why I marked these ranges before, because we can see that it used to be like a support area, used to be a resistance area. It spent the bulk of the trading in the middle, and there will have been a giant node in this area once upon a time. And the edge of that node, would be here, and like the edge of the node would be here. Debatably, there was a little bit of a range here too, so it could have used that. We could always go back and look. It wasn't too old, but we could see that it ran into it here. Like that wasn't when it formed. Like you can see it was formed actually
okay.
over.
So this is what I was expecting to see. I was a misunderstanding of how the tool works, and
Mm-hmm.
so that's great. I learned something.
Yeah, and there's other tools like you can use the fixed range volume profile, where for instance, like I can take this off for a second, and you could analyze from this specific point like to this specific point what is all of the volume in there, and then you could like look at that and then like compare it to like the volume overall, and you could really start to see a picture. I use that sometimes when I want to see the volume for a particular pattern. You can just draw it over top of the pattern and see only what the volume for that pattern is, not distorted by the chops around it or anything like that, and see how it
Oh,
impacts
cool.
the bigger picture. Yeah, neat tool. Usually I've
For the final one too, it looks like we're just three-quarters of the way through the red zone. Looking at the volume profile on the 5 minute.
on the 5 minute.
Yeah,
Yeah, let me
yeah,
get to a different chart here.
it's pushing the 15 up.
Interesting chart, but yeah, I see that. I see that. That reminds me of what it did on the daily, where it has that spike on the top and then it kind of chops at it like that, which is kind of disturbing. Not gonna lie, that's very similar to the components are all the same in use that chart. Basically this area right here, where we effectively came up to a high, and we even had this like little notch here too, where it's like it ran up and made that notch and then came down and had this like flat top here. And I'm like, I'm getting that same kind of vibe off of what we did when we ran up, made this kind of notch, made another high, and then kind of had this like flat top that it managed to hit several times before dumping. And I mean, like the components of this starting with those two spikes and then leading to that kind of grind where it has deep pullbacks all to this kind of flat top, which yeah, sure has a little bit of a spike at the top. I mean, like move for move, trend break for trend break, similar. Couldn't help but notice that. It did remind me. Now this chart, it just goes to show how far back those B points are and how far back this chart was used and how far back some of these nodes are. Because this chart, when I go back to the 1 minute, sorry, it takes a minute to load. There's a lot going on down there on the 1 minute, so it's not meant to be read on that time frame. So I don't try to get data out of looking at it on that time frame. I just look at it like this. So you can see when I zoom in, everything's like magnified and we can get a detailed description of exactly what ranges it was interested in using last time it was around here. And I can't help but notice that it did get stuck in an area that it did recognize as a node before. And then it acknowledged this area by responding to it and then coming back down to test the first one, stepping on top of it, acknowledging the green zone, shooting right to the red zone, acknowledging the red zone again, making a spike out of the top of the red zone that led to a spike out of the bottom of the green zone, and then usage of the range. Don't you find it suspiciously particular that they have put the volume node in the range like that? The people that are trading outside of the range don't really amount to much of the volume now, do they? That's the interesting part. And this was already here, as we saw on the daily, like from like I don't even know how many months ago that was, or years ago even, but still, it's rivaling that time. It doesn't really matter what the dates are. I know that it's rivaling the all-time highs, and this is the red zone that I encompassed over that entire area, and look at all the data that there is. All the ranges that there used to be, and then where it stopped. But we will use multiple charts. Let's take a look at this one. I can tell you right now that this gray zone is a 341, 361 to a major long-term fib set. Now you want to know what's crazy about this chart is I can't look at it on the long term. There's been too many short-term uh, sorry, analytical things put on here, and I don't think that you can see that exactly how in depth it is coming down here. Some of you may remember some of the ranges from here, especially ones like this one stand out. Major ranges with a purple zone to basically show the neutral middle. See those time to time. So if it dares to overlap areas that it has already been, I will be able to understand exactly what it was like, what it was there, and understanding is huge. Anyways, let's get back to the original. You know what I have to say about this is that in my schematic, it is true that we come from this environment. We come from something we're particularly interested in doing, something that we've done before, something that we've seen, throughout the day, something that it's done many times in the small short-term ranges. And I'm like, well, at what point did we ever go up to the high and stay there for as long as we have now? Can we find another point that we've done that without coming down after as well? So any time that we've ran up, made this consolidation, it's always come down, right? would be strange to see it not come down. And what could make people do that? Most people will be wrong because they've never seen it before. And at the end of the day, we're very close to finishing our standardized consolidation time. Because when we consolidate, is it not clear that we consolidate for this much? And it wasn't in this time, but did it not take the same amount of time at the highs before reversing? And what's funny is it took the same amount of time at the lows before reversing. And it's the distance between some of these other levels is quite suspiciously particular as well. Where have we seen this before? We've seen down here, not much. This is pre-market, so I'm like, we don't need to see it there. To some people, that time doesn't even exist because their securities don't move at that time. For years, people can trade QQQ without even recognizing that after hours is actually clear. And it actually is tradable, and it actually is crisp and clean, but many people resort to just being able to use this chart that only provides some of the data sometimes. So if I have a trend on my chart and it's cutting through one of these vital overnight sessions and it's connected to one of the highs, it's rendered insignificant to many of the regular stock traders that do not have the data. Like, what is this? You can see that's 5 o'clock in the morning on Tuesday. At 5 o'clock in the morning for Tuesday for me. Not like that. Nothing wrong with it, really. Can you tell even if I took the time where the day meets the end? You know, it's like not you can kind of in here. This is brutal. I mean, you can tell that's overnight. But, you know, doesn't do that very often. I mean, we're not accustomed to that happening throughout the day. But the people that don't even see it will never even understand that it happens. All they will see is those polka dots on the other chart. And it's like, which chart do we think they use on Wall Street? The one with the information or the one without the information? The imbalance is the time of day where there's the last report of the day every day. We get a report every single day that, you know, the brokers could tell us about. You know, CNBC could tell us about it, but they don't for some reason. And at the end of the day, it's a risk to people that don't understand that it's a report. Do you know that we had our first 100-point move in like a year on this the other day? Where was it? It was like an 80-point imbalance. But the whole move itself was over 100 points. I think it was 120. I'm terrible with dates because they truly don't matter. It's like I remember the situation clear as day. But this is where people are at their most distraught with this. I mean, we've seen that, you know, how did the first trend break? It was terrible, right? Second trend, terrible. Third trend, terrible. Fourth trend. How many trend breaks again have I done? And then this one? And that one? Or this is the trend now. Okay then. Jeez, it's been a lot. And I mean, you know what's funny is usually when it does this, it develops momentum divergence in the other direction, and it's going to be contrary to what it's actually going to do. So you can see that it's having a negative imbalance, or not a negative imbalance, a negative momentum. Like something about this movement, the person that's in control is going to demand this to fail. That's what's crazy about this. Because in the morning, we saw that it was something that was impacting the consolidation and it had a negative impact. I question this one heavily. I'm curious about it. At the end of the day, it's normal for a consolidation to provide a negative impact on the momentum that exists in the trend. But that has always been the case for every single up then sideways that we've ever had, though. They've all had that little bit of momentum divergence. What I really question is whether or not this momentum divergence is visible on major, like 5 minutes still going up. I mean, we haven't even really shown it on the 5 minute yet. This whole time we've been spending here. How many minutes have we been in this area? Yet to affect the 5 minute? That's crazy. How much time do we need here then? I'm like, we need like a day? I don't have that much time for that. That's ridiculous. I can't do that though. And I'm like, I think that no, not a day, but it's by the imbalance. I'm like, what are we gonna have an imbalance that is gonna respect the reversal or something that's gonna get us through the red yellow line? And I'm like, I think the people that are in control of the market right now have an agenda, and they're clearly interested in making sure nobody's in for the break of the red yellow line. If they tried to come back and snipe people out, like, hey, everybody that's in from this consolidation here is likely to have a stop maybe in this area here. Coming down to snipe them out and then continue higher is totally an option. Because what happens is people that are sitting there waiting to chase it, they see a big red candle, they short it, and they get absolutely destroyed on the reversal. Absolutely destroyed on the reversal. So let's watch. See if they even give the chaser. It's like egging on the chasers. I'm like they're gonna get fried, every single one of them. So let's see what happens here. At the end of the day, we have major levels up top. Like I think this one. I don't know how to make this level more interesting. I'll make it. Nope. There. That's the best I could do. It looks like I've adjusted that one in the. But that level, even in the event that we break this support line, I mean, this support line's been broken how many times? 5 times, 6 times, 7 times, 11 times? Who cares? Too many times. It just doesn't work. Now I'll tell you one thing. Was it not true that this is like a 56-degree angle? And now what's happened to our trend? It's 26 degrees. Well, like steepness is weakness. And how much has the steepness translated into actual reversal quality? Everybody that expects it to come back to the circle bit that's always been the reversal, how we make it run up on ducks like that, not
How did you get that
not working.
trend line to sing to you and show you the angle?
Which one?
The yellow one there. You said, yeah, that one. Oh, how did you get the gray square thing?
Oh, yeah. So you want to make sure that you click everything except for always show stats, because then if you ever want to check any trend line, I can just hover over it and it shows them. So but you don't want it
Oh,
all,
okay, okay.
you don't want it always on there though. But click
Okay.
click everything pretty much. I don't have extend left line and price labels on there though. Price labels will just give you a bunch of stuff that overlay on there, so that's not too good. This is contrary to popular belief that we pop out of the top of this range, so if it does a little bit of a chaser thing at the bottom first, then that means there's still some people that are in their way. I couldn't imagine them needing to do it unless they're there. That's the interesting part. Now that we're high, the people that watch a push out of the top of this range will be less inclined to chase it, as their experiences today with chasing have amounted to only losses. And they will think that that will continue to be the case. Ironically, they would get away with it, I think, now. Not that I agree with chasing in any way, shape, and form, but it's funny that it's working on them, and it's counting on the fact that they're going to fall for this, which is ironic, tragic, I guess you could say. But right now, this is kind of trying to get people, like, egging them on. What's funny is it seems like it's a sharp, fast move that breaks the trend, but it really hasn't went much lower than where it was at the low of the range. We have a huge node here. Could we test the low of that node? like I said, the low of that node probably has a huge clump of stops. And hitting that stop will eliminate a bunch of sell orders up here. Think about it. If we go down to knock everybody out of this area, all of their profit-taking orders that prevent us from getting through the red-yellow line will be eliminated. And they'll be forced to get into a position that's high and likely to be contained within the next pullback, which is true. I mean, first of all, this is doing two things. One, it's going to get rid of the people that think it's going to do this. Two, I mean, because that's been very, very common all day. It would be very strange for it to change all of a sudden when it's been working, quote unquote, for the people that have been part of it. Now, it would be interesting for it to pull something like that out of its arsenal. We can see that the people already associated with the dump, they feel fear. We're in a retest right now. So, you know what's interesting is that trend useless to me. What trend I find is attractive is new and coming from the top. And like we saw before, there's a good chance that we're in the business of doubling. Simply put, another green dash line, a short-term one, curious about it. We have one down here, and that would be the high of this circle node. So basically, what we haven't ever seen before is it to instead get through this high, having not got that low. That would be something we haven't seen before. And even if it gets close, but it doesn't get all the way there, it's something that's new. And at the end of the day, sure, sometimes in the past, when we were finishing this kind of movement, right, it would start to become less of a pullback, and then less of a pullback, and then no pullback, or maybe like less and then no pullback. You know what I mean? So basically, it would pull back still, but not the entire amount. And I mean that's sometimes it's the first step in sequence. But remember, making that high break, having not gotten that low, is something this trend has never seen before. And what could that mean to do something so new at such a controversial time, close to the end of the day? Because we know that the institutions are interested in maintaining that control for the entire time of the day. What would it be to them if the entire day they work their, they work hard to, keep that control, maintain that control, and then the imbalance comes around, everybody gangs up all of a sudden to sell in 1 minute, and it goes down real hard, and then somebody else catches word of that selling, and they panic and start selling. Snowball. And that doesn't look good for assets, billions of dollars that have been acquired for years. You have to catch the ball on everybody dropping their shares because they hear that Joe around the corner is doing it. I'm like, no, 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 no. So we keep everyone contained within a pen. And that's why we centralize for the imbalance. That's why we are centralizing for the imbalance. And we keep everyone contained within an area where, in the event that they get out of control, we've already made it clear to them that there is a resistance barrier and a support barrier. In the event that they get out of control, we just have to add a little bit of volume to the support barrier, keeps them in the range. In the event that they get out of control, we keep them in the range by adding to the barriers. And they don't for a long period of time, if we can dissipate that kind of aggressive ganging up of everybody in at one point, like if there's a news article or something like that and they all flock together and they all start trading on the fear of greed or something like that, then basically if they're kept in a range for about 15 minutes, the average attention span of most of the people will dissipate and they will leave and they will think nothing will come of it. And then the people lose their ability to unanimously move the market. Then who gets the control back? the people with all the money. Because all of the people may think a certain way about a certain event, especially if they're swindled into it from the news, but or if they're swindled into it by the reports, should I say, because the reports seem to be the holy grail for a lot of people. Just remember, those reports are created by other human beings, and if they're not, they're created by something that a human being created, and it could be in the best interests of that human being and not your interest. So if you allow that to be a variable in your analysis, well, then you're giving them some of the control, and I do not accept that. It's terrible. So, other things can be considered, not what they have to say. So that's the way I am. But I'm gonna change the color of this because it's like blinding a freaking line in my eyes being so bright like that. I'm gonna make it like this color. Close my eyes and I see that. Like, geez, too bright. I've been turning down the brightness, but I forgot to do that today. Okay though. No, this is funny that I even have these fibs on like this because like they are clutter as it is right now until we break that high. But when we break that high, those fibs are going to be the ones to have. Ironically, what I can do is oh no, I can't. I could dim them down a bit, but no. Now, what I would be interested in actually is a fib set that goes on this. Tells us how much we're retracing. Now, what's been a common fib retracement today? The 50? Because we're about that.
61's been there. Yep.
Yeah,
61's
61
been there.
too. 61,
Yep.
yeah, it has been there actually, yeah. Even in this trend, we've seen 61s, yeah. Okay, yeah. That would look like the low of the node. Well, there for a second. Looks like we're at the low of the node right now. Everything that we're doing could be a subject to being wicks and spikes. This is the line that provides the most intrigue to me, most interest to me. Now, of course, the purple lines, I haven't went over those. I keep them purple because they are associated with symmetrical triangles. And the indecision of that symmetrical triangle. I guess this one at the bottom. Do I really need that one? I don't think I do. I don't think I do. This one to be honest. Did its job. Same kind of trend line as this one. And the way that I see it right now is there is a giant node for the imbalance right here. And that node, we are in the middle of it for the imbalance. So it has the bottom, all of that volume. You see that giant node that's down there? Has that giant node there. Then what's on the other side of our current price now? Well, all of this volume right here? That's kind of suspiciously particular that they've just kept everyone inside of this pen, like I was saying, where everyone is allowed to trade now inside of the middle if they wish, if they want exposure. But what they have is nowhere near capable of competing with the orders that the entity that moves the market is using, clearly, because they choose that everybody gets to be in the middle right now because they're in the pen. And I see it that way. And as soon as this is over, we're back on the agenda of the long-term assets. They want to make some money, and everybody will be out of the way because it'll be so close to the end of the day that everybody finds too much risk in trading it. But it's great for the people that choose to continue holding, and exposure is key. And I mean, if we've just went through what is a test of integrity that's this big, what is it for it to come back half that way on twice the amount of profit nearly? I mean, it should be nothing, right? If you've already held through that once, at the end of the day, even if it pulls all the way back, that's what we're used to. But we're looking for it to change. That's the idea. We're looking for it to change in the sense that the yellow line is meant to break to the green dash line. And anybody that's shorted there is directly like they're literally it's like, okay, you were given 2 minutes to take profit. Everything's being bought back up as quickly as it was sold off with absolute, you know, certainty. And I'm like,
It's like an imbalance move before the imbalance.
well, they just brought it back to the middle of this last move here. So from one middle back to another middle here. The middle of this downwards move is now hit. They were like, they don't have any kind of pressure on the imbalance. Push them out of the way before the imbalance. Clearly, those big orders are singular entity, the ones that impact. Because look at the crisp interest in retesting the POC, understanding the value of responding to the high of the node and coming back to the POC, doing the retest at the same time. All of those things are really good things that we see are working in really good, strong environments that lead to things working properly. So I'm like, well, that's all good. I just recognized that this was a triangle and it never tested it. And that could have aided in its ability to actually get back here. And who's to say we don't do
Yeah, good
this
point.
spike? Who's to say we don't do the spike on the other side? I mean, that's totally possible as well. The whole thing, the imbalance could make that happen. Now, remember what I said about in the event that we cross this high without having hit this B point. I mean, somebody's interested in making that happen, it looks like. Imbalance in less than 30 seconds. Every position must be protected with a stop. Everything must be safe. Any positions taken from this point on are directly exposed to the imbalance and the risks that it brings on the table, which is, not much, but it's you don't want to mess with it. If you're in, you want to protect what you have, basically. Everything that's sold off on the imbalance is subject to being bought back up instantly. This is the people's last shot to work together, and they're letting them have it. And they see that nobody did anything. Give them a minute. See if they recognize the target above the retest. This is the retest, but it would get through the retest potentially to get to the target. Curious. Because the target will be recognized by a few, the retest recognized by many. Anybody, oh, you know what they're doing? They're letting people short that retest. They're going to stop them out in a second. They're going to pay for the new high. They're going to pay for the new high.
Well,
Interesting.
somebody has to pay for it, John.
So by this point, the imbalance is unlikely to truly have any further impact on the market. And there is another imbalance at the close, but I mean, you could just know that as the close, and it is a time where they do rebalance things again. It happens at the open, happens at 350, happens at the close, and it's the next event of the day, and that's the close, and not far away. Curious to see what the time's like from now till then. If they make it move before the close, not uncommon. I am curious to see if they can turn that green dash line into a support as they did the last one.
This retracement just before the imbalance and stuff that actually went to the 50, not the 61, and then went up. So
Yeah, we saw a 50 today somewhere else as well. I thought
yeah,
a
yeah, we
big
did
one, maybe
initially.
maybe like the big one or something.
No, one of the initial ones that went down
Oh
was it
yeah, yeah,
that
yeah.
was 50.
I think
Then it
so.
went down to 61, 61, and then it went back up. But I was thinking it maybe went down to 180, 200. It only went to the 161 and the 50. So
Hmm.
because I got another account I want to freaking just get a few points on. So
Mhm.
hard time trying to get through that 15.
Let me look at that. Oh yeah, okay. That's an interesting barrier to put right there. After all, I do think that the green dash line could be used as something that could actually propel us rather than something that can actually have a negative impact now. When we get to it, it's subject to being lower than the high than where we were, and in turn easier to break, and could in turn propel us instead of uh, the opposite of propel, like it wouldn't hold us back, for lack of a better word. But this looks like a 61. Like, what did it just do right there? Is that a 61 right there? It's basically a 61 right there that it just bounced off of. So not like it's those are that's fine. I mean, there's nothing wrong with that. I mean, it did a 50 before. It could have done a 61. It would have been 6 of one, half a dozen of the other.
61 now.
Yeah, that's the 61 right there. Yep.
Yeah, yeah, yeah.
Small one, but yeah, that's fine. And what's funny about that is when we look at the way that it retraced back into the day, it did more than a 61. It went all the way to the 78. So I'm like, why is it choosing to hold the 61 on the bottom, but then go through more than a 61 on the top? That's kind of uneven and insinuating that the 61 was easier to break to the upside. On the short term, it might look like a head and shoulders, but that could be the last batch of short sellers before we try and get through the green. I think, yeah, I think the last few that are bearish will be trying for the last time on the right shoulder there. It played out to the neckline though, the right shoulder. You know, and if I it's hard to see on the 1 minute, right? But at the end of the day, it did go the left shoulder, the head, the right shoulder. That's the head and shoulders. But it's very, very crappy and very, very small. What's ironic about that is it fell into a left, a head, and a right. So the last thing to happen is for this to be an inverse right shoulder, ironically, um, side of this triangle. We're at the close, almost 5 minutes till the close.
Oh, what am I catch, John? I got that low at 1246. Just hold it overnight. Game plan? Yeah.
Yeah, I think so. You've taken
You
off
just
enough
leave it
profit.
at the. Oh yeah, yeah. Like it's profitable. It's just my biggest profit on it's actually what's running right now. So,
Okay.
but just hold it overnight or pull the stops up or
Well,
what would you do?
I would make it a minimal position size. Like if you can trim some off before holding, reduce the risk. It's probably best because
Well, I
at the
just
end
got
of
one MNQ going, so
okay, that's nothing. Then that's not a big issue. I think that it's relatively risky to hold from like long overnight from highs like this. It's almost like if you're not contained within tomorrow's retracement, are you contained within next week's retracement, like all the way above every single B point too? And I'm like, like there's incredible risk to holding. Like make sure that there's definitely a stop and so on, and that the
yeah,
stop is
yeah.
profitable.
Okay. I guess I should just look on the hourly too and see where we're going to. So,
Yeah, like
you know,
it's
have a profit target up there and, you know,
Yeah, it's an interesting environment because we are really high. I think the next major move is going to be a downwards move, but it might be in the process of just grinding for, consecutive days very slowly to new highs, making it difficult for anyone to get exposure short. And then when the least amount of people have that short exposure, it's likely to return to the B points down below. But you might be able to hold through the further grind that there could be over the next few days, that it grinds up there.
just hold it overnight sort of thing, even if
Yeah.
it's just on that second spike. Yeah. Okay.
You could find a hedge for it as well. That's an option, but it is M and Q actually. What we see, yeah, no. Rings a bell though. Made me think about the other indexes. What are they doing? Oh, it's interesting that they've come off like that, or we haven't. You know, towards the end of the day, they're saving it for the most uncomfortable point for everyone to be part of, where it didn't give them this, but instead we've taken a lot longer than we ever have to do anything. And if we advance through the highs, having not come back down to the lows, well, it's just done exactly what I said it should again. And that's the way the cookie crumbles. And remember, this is what it looked like when I posted the rough schematic that I think it can be helpful for understanding what I think is going to lead to. It's showing that each consolidation has a pop that's taken back to the consolidation. So the circle's the consolidation, the pop gets taken back to the consolidation. I'm looking for one of the next pops to actually hold and continue higher, basically. And you know, hold is like something we've never seen. That's why I was like, actually hold. Because they've all actually come back to the consolidation. And it's been, now it's like, where'd this come from? We've went sideways longer here now than we've went sideways. I guess we're rivaling this time right here. It's almost like a competition. But man, is it ever exactly going to be that time that we end this consolidation? And is that so abnormal? I don't think so. And you want to know what the effect of having went sideways this much before was? Was to go up this much. Was to have had an impact this much. Do you notice that that line starts there? And we can see that we've used that to get up to where we are, where we use this after doing that. Don't be surprised if we do this again on command. The close.
Nice little push up.
Yeah. I mean, it's gunning it for every single target that's left on there. This is the closing bell, but I do suspect that they will continue to push higher. And effectively, this motion, which I can make the original color again just to post in the chat, this that's exactly how it looked before, exactly how it looks now. Right here, I'll post it.
It's kind of funny how you pick those patterns out of what we're doing here. It's kind of cool. Kind of
Yeah,
confluence.
you can't find that on Google, that's for sure. This is exactly, and it's like, you know, these people, they're working right now. They're here. They're part of this. They're getting paid now. All these other people, they're done at 4 and they're gone. You know, that's just the way it is. And I mean, like, well, we can either choose to be a part of this entire move doubling, which I do believe is going to happen. They're getting ready to finish their day right now as well. But at the end of the day, you can see how important it was to get everybody out of the way to do something that nobody's ever seen before, something that had to be an expectation, something that we haven't seen not in any week before this. You know, we have what, maybe a few months ago we were doing this, but like I pulled it right out of August, or what was it, October.
I think the only sort of resistance we're going to get right now is maybe a little bit at that VWAP, or
Um,
as we approach the after hours.
yeah, I love the idea of grinding the crap out of that view app. I'll just draw this over top here. see exactly that idea formulated.
From down below, so I mean, nothing's going to go south unless it passes that trend line too.
That's it. That's it. That's how it ended. That's what it did. It did what it was supposed to do, even from the moment that it was supposed to go sideways. I'd never have it do this to us, but it's because it is the the way it's supposed to move, ironically, and it's because nobody else can take it. But if you see what you get paid for being able to endure some of the stuff that the market throws at you, it's not just random movement. You don't just pick when you want to trade. It's like clear. It's a map. It's a language. Like I say oftentimes, like you understand every individual word that I'm saying and the collective of how those words are combined into meaning. Like each smaller move combined has a bigger picture meaning, and an understanding of the environment can be the result of understanding all of the smaller moves and all the bigger moves and everything that it's trying to tell us. And everything that it does do is something that it's trying to tell us, and we can either accept it or neglect it. That's basically where I'll leave it at today, and hopefully you guys had a wonderful day. I'll catch you guys later, and feel free to reach out if you have any questions.
Listen, John, appreciate it.
Yeah, anytime.
All
Take
right.
her easy. Have a good one.
See you guys.
All right.
Yeah, see you guys.